SMEs by SV.com.
Purchase. and get to know those that you're close to or around. Okay? Thanks. Good morning. So everyone has a cup of something, a drink of anything. Brilliant. So I guess we can continue on with our welcoming remarks. Our guest of honor is on the way. However, we thought we will start with the initials, and he will get us as we continue the session. I guess Zahor is in here somewhere? Great, we'll start. Good morning and welcome. Again, my name is C.K. Richards. I'm the Executive Director of the European Business Group, but today I'm your host. And before we start, I'd like to maybe first say why we are here. Today on this session on unlocking innovative and alternative financing for SMEs and startups in Tanzania. We hope to gain a lot of insights on the sector. Everyone is very curious on what will be presented, how it will be presented, and the learnings that we'll gain from this. And on that, first we'd like to recognize some regulatory bodies that are here today with us. That will be CMCA, TCRIA, and ICTC. Everyone in here, karibuni sana from our regulatory bodies. You're all very welcome. Also, we would like to welcome and thank our representatives from diplomatic missions. That's the Embassy of the Switzerland in here, the USA, Finland, UK, and the Netherlands in here. And also our development agencies and partners, who are the IFC, World Bank, UNCDF, UNDP. I have seen UNCDF. Hi guys, morning. Asanteni sana. Why are we here and who has brought us here? We'll first talk about TSA, Tanzania Startup Association. It's the non-profit organization, an umbrella membership-based organization that brings together stakeholders of the startup ecosystem in Tanzania, including the startup companies, innovation hubs, incubators, accelerators, maker spaces, and other entrepreneurship and innovation support. Organizations to drive, advocate, and lobby for the frameworks that create conducive business environment for startups in Tanzania to help them grow as well. So this is TSA who has brought us together this morning, and without further ado, I'd like to welcome Zahoro to come and give us a brief welcoming remarks. There he is. Karibu sana Zahoro. He is the Executive Director of the TSA. Karibu.
Good morning. Good morning.
Good morning.
If anyone is yet to get a cup of coffee, please, they're still saving. You just need to a little bit wake up. And I think a lot of you, I tend to believe a lot of people are just like me. They are not morning person. Or maybe I'm just kidding myself. I'm the minority, but I do believe majority are not a morning person. So that's why you're still not yet woke up. Thank you so much for everyone for taking your time to come here. We really do appreciate your time and your contribution to this ecosystem. I'm here to deliver a very short message on behalf of our board of directors, who are the custodian of this august organization, Tanzania Startup Association, TSA. The big reason we are here, as we all know, some of you are old enough to remember where this country was 30 or 40 years ago. We did not have something called private sector. And with it, we lacked something called private capital. Fast forward in 85, we do return to the market economy. Then we return into businesses. Alongside with it came private capital, things like banks and other models. Fast forward, we do have a very robust financial system in the country. I remember in the 90s we did start our stock exchange to offer, to make sure that the public participates in public investment in capitals. But still, with all the efforts which has been done, we as a country, while it's not unique only to Tanzania, but all over Africa, we do have gap when it comes to financing businesses. And this gap really impacts more the smaller businesses and the early stage ones, plus the medium, the small and medium enterprise. But also, there's a new breed of new enterprise coming up in our continent, startups. They're the most affected by lack of capital than other bigger enterprises, which can unlock capital and financing from the traditional institutions, things like banks. So for a long time, the refuge for startups and SMEs has always been to seek alternative capital, alternative financing. That has been the model. And as you know, normally they say the first investors are the 3F, family, friends, and fools. So we're all very good at using that, but it's also limited. Me personally, I've limited friends. Of course, I've limited fools. But being an African, I have unlimited family, of course. But still, it's not enough to finance our businesses. So alternatively, we have to seek for other means, other institutions to finance our ventures. But that gap has still missing. So we end up having something my brother Salum taught me called missing middle. That is the gap where the family, the fools, the friends have already put some money into your venture. You have started a bit, but now they cannot keep bailing you. Now you need to, unlock other part of financing so that your business can grow. And in other developed and matured markets, you have things like venture fund, angel investments, seed funds, private equity, etc., ready to take you on board with technical support, with financing, and to take you forward with your business. But this is something very new in Africa, though we do have some other countries which are very way ahead in terms of having these alternatives. We know South Africa, we know Nigeria, we know our neighbors in Kenya, and that's one of the big reasons we invited Madam Eva, who is the chairperson for East Africa Venture Capital Association, to come share with us the experience from our neighbors in the East Africa region as a whole. So the whole idea we brought you all of these things I've just said are not new to you. But the whole idea to brought you here, it was in one of the things we believe as TSA is to have collaboration, open collaboration and open conversation of what needed to be done and how. And with that, we cannot always do that alone. We cannot always walk in silos. And that's why this idea came when we approached the government about this topic of alternative financing, that to get everybody in one room, Development partners, government, regulators, academicians, researchers. I see Mzee wangu, Professor Wangwe. Yeah. But also private businesses, startups themselves, SMEs themselves, the likes of World Bank, IFC, but also the government itself, to be in one room to discuss, to deliberate, and choose what's the best way forward. This is not just, we don't want, if you've noticed, whenever we do events as TSA, it's always not just another forum for people to come meet and talk, but it's always, what's the action point, what's the way forward? And that's what we are doing today. We want this event, this morning, to be remembered as the meeting which sets the tone to unlock the alternative financing in this country. With that, thank you so much for listening to me.
Thank you, Zahra. And as I am about to introduce our next presentation, I just wonder, does everyone know everyone that's sitting on the side? Just thinking. Could we just take a minute to introduce ourselves to each other? And just so we know whom we're sitting beside, I have met Professor Wangwe. Yes, exactly. Could we just take a minute to introduce ourselves across the table, just so we all know each other? And if we don't, maybe the guy beside you. Brilliant. Perfect. That's much better now. We are not sitting across strangers anymore. Okay, it was just an introduction, not a conversation. This is just literally just an introduction. Thank you, everyone. The rest can continue at after the event. Thank you. Get the business cards and you can follow on after. Brilliant. Our next presentation is by Salum Awad, the CEO of SEC Capital. The topic is on challenges facing SMEs and startups on access to finance and how alternative innovative financing can address challenges. Sorry guys, could we exchange business cards and follow on the conversations? Thank you. Please, Salum, karibu sana. Asante.
Thank you. Good morning. So I think I'll have to ask you to look at the screens because I'm going to do some PPTs. So if you don't mind. So as I was introduced, my name is Salum Awad. I'm from SEC Capital, which is a strategy advisory and investment banking firm. And we are also the manager of Tanzania Venture Capital Network, which is the party organizers of this event. And my task actually is to share my thoughts with you on the alternatives when it comes to financing startups and small businesses. And of course, all these alternative financing models are not new when it comes to the finance world, but are pretty much nascent in Tanzanian market. So we think probably we need to do one or two things to unlock them. As we all know, the traditional ways of financing startups and small businesses can only do much. But if you really want to, what Zohor was saying, if you really want to unlock the role of private capital to finance economic growth, we need to have multiple ways of financing that growth. So unfortunately, okay, good. So just to Just to quickly introduce our firm, I know most of you, I think I know 90% of the people in the room, so I don't have to say much in terms of our background as a company. But we've been transforming for the past 11 years from just a traditional consulting firm to pretty much a diversified advisory and financial services company, from strategy to investment banking to private equity to everything that we do today. And as a firm over time, of course, we operate in 3 countries, and we have been involved in transactions in excess, actually now in excess of $400 million. And just to put just one note, with respect to my presentation today and our theme of the day, I thought probably it's good to share with you some of the initiatives that we have been building in-house over the past few years as a way to address the issue of access to finance. So one is we run the Tanzania Angel Investors Network, which we started in 2018. It's a 36-member network now. And we also, we're probably going to be running the equity crowdfunding platform as well, Wengi, for those of you who know of it. After getting the nod, the positive nod from the regulator CMSA to allow us to, kickstart, which is a way to tap resources from the public. And then, of course, last year we also launched our seed fund, $5 million impact fund, which will be investing in pre-seed to seed stage startups. In Tanzanian definition, today, if you go to more mature markets, a $10 million transaction in private equity is still looked at as pre-seed or seed stage. But it's very surprising in Tanzania, if you're raising money at pre-seed and people are still asking for traction, which is a huge mismatch. So unfortunately, we have to domesticate everything that we say. And then, of course, the Tanzania Venture Capital Network, which was just mainly as a way to organize the market. I'd like to recognize Eva in the room, who is the CEO of East Africa Venture Capital Association, which has been doing great work to promote the industry across the region. So we thought probably at the national level, we may have an initiative that can coordinate and organize nation-based sort of activities that we've been doing. And then, of course, the East Africa Export Fund is an unfunded fund, which is supposed to support trade finance, which is one of my of the points that I cover, the gap that we have in trade finance and the role it can play in international trade, international finance, and of course it is certainly in economic development. And Shirka is our Islamic finance outfit, which we just launched to see how can we tap it into a $3 trillion industry, $3.6 trillion industry, where we can use such resources as well, which of course will also be part of my coverage. So just to share some more highlights on the Tanzania Venture Capital Network. So what we do, this is again is a not-for-profit initiative. And our work actually is around training. We have done a couple of trainings around private equity, venture capital, whether on the investor side, institutional, some of the institutions as a way to turn them into institutional investors to finance fund managers. And startups as well in the space of being investor ready. So we do networking, events, research, insights. We did the venture capital guide for businesses in Tanzania for free, which is downloadable, is available online for anyone. So we do the Tanzania annual venture capital conference. So we have done twice. So we're going to do the third one this year, God willing. We also participate in other programs. So we participate in the Islam Stock Exchange acceleration program called DIP, where we see how can we support companies that are looking to raise money from private equity. So we as a company, through all these initiatives, we work with 36 private equity and venture capital funds globally as a way to bring them to Tanzania and do more and more deals. So you don't want to be under the shadow of Kenya always. Yeah, so for the past pretty much almost close to 10 years. More than 50% of all private equity and venture capital money been going to Kenya. So I think it's about time. I know Juanne doesn't like to compare, but at times, it's good to see where we are and where our peers are and what we need to do. So these are some of the things that some of the activities that we've been doing under the network. So my key talking points actually, sorry. Wow. And because the guest of honor is not here yet, I know I have all the time. No? Okay. Yeah, so I just want to okay. Yeah, sorry. Thank you. Sorry, so I won't say again, have all the time. So they put my mic off. And again, of course, I want to make myself very clear as well. When we talk of alternative ways of financing, we don't talk about all these other instruments. People feel like, okay, Salom, you don't want to talk about banks? No, actually we do. But I think banks have their space, and they always have their space. The size of banks is huge. You cannot really compare. If you look at the total venture capital investments which came to Africa last year, all in total, close to $5 billion, are actually the size of 2 banks in Tanzania in terms of their assets. So you'd see the role of banks cannot be ignored in terms of their size. Some of the challenges that we see and potential solutions that we think we can look into. Yeah, so just to keep the ball rolling. So I know most of you are not pretty, I'm colorblind. So the orange colors you see on the map, those are the countries which took home almost 85% of all venture capital investments that came to Africa last year, which are South Africa, Nigeria, Kenya, and Egypt. So for Tanzania, I think we banked around close to $100 million. But I tell you, that's pretty much 1 or 2 transactions. You may have 1 or 2 transactions, but with high value. So that should not mislead you. That does not necessarily mean we had many companies that were able to raise money from venture capital. Should I proceed, or I should recognize the? Okay. Yeah. So building on that. The remote. Yeah, so while we also see all these investments coming to Africa, actually what you see here is the $5 billion that we invested last year in Africa were 3 times more than all investments which were received in Africa the previous year. Actually, the previous 2 years. So it's also important to look at what is driving all these investments coming to Africa for startups. One is population. We know with the growth of population that we see in Africa, that creates a lot of opportunities from consumer goods to financial services. That as a result brings you a lot of innovations in the market. That of course attracts investments. We see a lot of innovations in Africa, which is a good thing. From Kobo 360 Nigeria to Ramani Tanzania. So all these innovations that are happening across the continent attract investments. Manufacturing or agriculture and agribusinesses, financing to these sectors are still less than 20%, 10% respectively. And Yeah, if you look at trade finance as well, I think the challenge is almost the same. So the report, which was recently published by Africa Development Bank on trade finance in Tanzania and Kenya, which is a comparative study, shows that majority of applications from SMEs looking for trade finance are actually rejected. 80% of applications by SMEs for trade finance between 2018 to 2022 were rejected in Tanzania. And for that reason, majority of these companies tend not to go to banks to ask for trade finance, according to the report. So almost 60% of SMEs which were surveyed, actually 800 companies were surveyed in this study. The slide, the bar graphs in the middle, you see that majority of investments are in Series A and Series C, which pretty much the startup now has gone to the market, they have some traction, and it's easy now to attract money. But if you're at pre-seed, where it's pretty much at one of the earliest stages of a company, that's when you can attract less and less. But that is changing now across Africa. So when we talk of having our own ways to unlock financing in Tanzania, if it's traditional, we know where to knock it off. If it's non-traditional, we know which ticket sizes we need to look at and which type of businesses we need to target. I don't see a problem for a company that's raising $20 million. I don't see the problem with that. Eva will correct me if I'm wrong. I think last year, dry powder was around $1 billion, meaning the amount of money that has been raised but not being deployed, meaning looking for deals. And the average deal size was around 6.3 million, according to Africa report. And I think Eva can share more data when she speaks. So when we talk of alternative financing, actually, we are looking at two things. One is we are looking at building products, alternative products to what we see in the mainstream. But secondly, we are building mechanisms that we unlock the traditional financing to go to areas where they wouldn't go if that mechanism was not in place. So that's actually what we refer to alternative or innovative financing. So I know some of these slides I shared in the Innovation Week, so if you're there, you just have to take a chill pill. It might be some repetition for you. So one is, so we can look at innovative financing in four main blocks. One is we can build direct products or schemes that would directly invest into these startups and SMEs. So this will cut across angel investing, venture capital, private credit, which is alternative to commercial credit, and of course using the capital markets. Of course, we can also look at another block of initiatives, which is de-risking. So de-risking is pretty much using instruments that we unlock the traditional finance to go to SMEs and startups. So whether you want to use blended finance, whether you want to use results-based financing such as impact bonds, that's where we can use such to unlock traditional financing. And then, of course, we can use technology to build platforms that can be used to raise finance. So whether it's crowdfunding, whether it's peer-to-peer lending, whether it's invoice discounting, one of the initiatives I've seen in Tanzania lately. So I think those are the areas where we can also explore and, of course, reallocate resources. So we may have some resources somewhere, but if you can reallocate effectively, can address to a large extent the issue of access to finance. So one of them, of course, in the corporate. So the CVC stands for Corporate Venture Capital, where we can tap into big balance sheets of corporate companies to tap and of course, reallocate some of the resources. Recognize NMB, which is one of the supporters of the event. Yesterday, I think in the news, they relaunched, I might say, 1 billion shilling startup fund, which is a good start, I think. I don't know how it is structured. I don't know what kind of instruments they use, but at least you see corporates coming to the party. It's a good initiative. And it's a good indication. And then, of course, we have not explored enough when it comes to endowment funds, where I believe there are a lot of resources which can be put into these funds, and these funds can invest into early stage VC funds that, of course, resultantly can invest in startups. And government funds, which will be my final slide, on how can we restructure some of the government funds and tap into them and use them to finance some of these businesses. So I don't have to say much. So one of those is angel investing. So I know majority of you know about angel investments and angel investors. So if this is the first time to hear about it, angel investor is a person who invests their own money, in exchange of commercial interest in a company, usually at the early stage, small amount, plus technical support such as mentorship and coaching. And then of course, we also have crowdfunding, which is pretty much raising money from the crowd, from the public in small amounts to finance businesses which you would hardly raise money either from an angel investor or from a venture capital investor. And then of course, I want to touch just a little bit on crowdfunding, because one of the things we'll be doing in Tanzania, we expect to see the growth reaching almost $240 billion by 2026. The size, this is the total funds that will be raised through the crowdfunding platforms. But unfortunately, majority of these investments will be happening in the Asian Pacific, almost 63%. So what can we do to do more in our markets here? And if you look at the growth between crowdfunding, venture capital, and angel investing, you see, but crowdfunding, of course, saw a quick rise from 2013, and we hope to see more growth, which I mentioned in the previous slide. So endowment funds, I don't have to say much, but I think universities can do pretty much good work here, where they can tap some resources. I think I spoke about this in Innovation Week, where universities can have microfunds that can be used to invest in their final, in the students' final projects. So by the time they graduate, they go to the market with a business which is funded, at least with seed capital. So they don't have to start looking for jobs, because there's no way we can catch up between the number of jobs which are created yearly and the number of job seekers which will come to the market yearly. The mismatch is huge. If you want to catch up that with jobs, I tell you, you're shooting the moving target. So you have to find other ways to empower these young people to start businesses and fund them before they come to the market. And just to put things into context, so these are endowment funds from the largest US colleges and universities. I think I mentioned about this. So this is, the first one is Harvard with $33 billion, which is 3% of Tanzania GDP, but that has been growing over time. But you need to see one thing, where are they allocating their money into? So almost 44% of the investments go into private equity and venture capital, meaning these can be tapped into as institutional investors who can invest into early stage VC funds, which will invest in pre-seed to seed stage startups. The next thing is, I think I mentioned earlier, Islamic finance. So this is one of the upcoming financing instruments, which is valued at almost $3.6 trillion now globally. And you have seen some developments in Tanzania already. We have 5 banks which are offering interest-free financing using risk-sharing and profit-sharing financing models. People ask, okay, if they don't charge interest, how do they make money? So they use profit-sharing instruments. And of course, we anticipate the growth to go beyond $4 trillion in the next few years. Last year, we saw one Tanzanian company. Was it last year? Salim, was it last year? Before last? Last year, we saw one corporate sukuk issued in Tanzania, which is a corporate bond using Islamic finance instrument. So hopefully, we can explore as much such alternatives as well. The remote? Wow. So some data around growth and issuances of some of these Islamic finance instruments. So the most common is Islamic bonds, which are alternative to traditional conventional bonds. And last year, they reached around $180 billion globally. And the total cumulative outstanding Sukuk assets globally now is close to $700 billion. And the demand, I think, is close to $870 billion. That gives you a deficit gap of close to $168-70 billion, which, of course, the market demands, but there are no issuances. So it's an opportunity that we can look at. Then, of course, there's the blended finance. That's where we see the role of government can come in. So we can use some of the... so I'll talk more on this on my final slide. But this is where we can use government money, whether it's 10% of LGA collections, whether some of the funds that are sitting at the National Economic Empowerment Council. So instead of using some of these funds to directly finance small businesses, which I think are sitting around 50% almost of NPLs, we can use that money to unlock private money by building financing instruments. So don't finance directly, partly yes, but partly use that money and build a fund, and then bring in private equity money or an angel investor. If Martin wants to invest as an angel investor, then we give you a first loss guarantee of your equity for you to invest in startups using that money. So instead of losing that money by giving someone some default, you can guarantee an angel investor who didn't want to invest in the first place. And over time, we can look more angel investors in the market. That's how we can unlock private capital into the market. And this, again, is not a small... And this is not a small industry. The data you see, these are the top 10 markets which received the largest blended finance money last year. In Tanzania, was on the 18th list on the investments that we received from blended finance instruments last year. And of course, we acquired equity and venture capital, which to me, I think it's a no-brainer. It's easy to attract that kind of money because there's less issues, especially on the demand side, unlike when it's early stage. So you see, as I was mentioning earlier, when we look at the private equity deals in East Africa between 2014 and 2019, I'm sure some data 2020, you see almost 56% of these deals in terms of volumes to Kenya, and 54 in terms of value. And Tanzania, almost 50% of the deals that came home. And it's very unfortunate. I think some years back, we were second largest. Remember correctly. But now we're the third largest behind Uganda. So I hope we won't go beyond Rwanda in Ethiopia. So we need to do more in terms of how can we attract more. And there's some of the Tanzanian companies that receive private equity in particular. In venture capital, some of actions. So you know these companies, Agora, with the Tanker Fresh, with the Jenga Fields, with the Water, it's a small transaction, I think $1 million. With Zanrek in Zanzibar, I think GOB Equity is the most active private equity investor in Tanzania. I think 20 plus transactions have been done in Tanzania. And of course, we have seen startups coming to the party as well. East Africa Fruits, actually, they have raised more than once. Nala has raised 10 million. Ramani, you have raised seed. Okay. Yeah. So usually when it comes to reporting, you have disclosed and undisclosed deals. So I respect that. It's not public. When they decide to put it back public, will be great. I think it's important in the Tanzanian market to put these things public, to stimulate the market and show investors what is happening. In some of our colleagues in the government to see it's also happening. In some startups as well to see, okay, they did and do it as well. So I think it's as important to disclose every single deal that we close in this market. Wow. So in terms of the landscape, where are we now as a country? As I said earlier, we have 3 angel networks. One I think is a little bit dormant. One is new, recently launched. And the other one is the one that we manage, Tanzania Angel Investors Network. We have 25 plus, actually 50 plus, honestly, private equity and venture capital funds which are looking to invest in Tanzania, but from outside. They don't have offices here. I think the last private equity firm that I had an office here was DOB Equity, and they exited and they relocated to Nairobi. And so we hope we won't be the only one with a fund here. And then, of course, you have instruments that can be used for de-risking. We have PASS, which is pretty much focusing on agricultural loans with banks. I think they're doing a pretty good job. We have Aceli Africa, which covers across East Africa, doing almost the same thing. We have African Guarantee Fund, which also, actually, the good thing about AGF, they also guarantee first loss of equity investments, unlike these other two instruments, which only focus on debt. And then we have Funguo. We have Funguo people. Joseph. So Funguo is a new program coming to the market, and I think they will play a huge role when it comes to de-risking, because they will finance some of the startups which are not commercially ready, quote and unquote, and put them to speed where an angel investor can come and investing. Or we can also use Funguo for building up blended finance. Why not? Maybe Tanzania Angel Investor Network with one government fund and the Funguo, we can build one blended finance instrument. I don't know, and maybe do a $10 million worth of transactions for the next 3-4 years. We have some tech-based initiatives already in the market. We have Wengi, which is our own crowdfunding platform. We have Wezesha, which is a donation-based crowdfunding platform. We have Emagri, which is a crowd farming, in a mix of crowdfunding as well. I don't see if Emagri in the room. We have Flendly, which is an invoice discounting fintech with a very interesting business model. And then, of course, in Islamic finance, we also have 5 banks that are offering such services: CRDB, KCB, Amana Bank, PBZ, and NBC. So what can the government do in Tanzania to unlock more private equity and venture capital coming to Tanzania? There are so many things we need to do. Building an ecosystem for private equity and venture capital is not a function of one player. It's an ecosystem play. Each one has to do something. But at the end of the day, the government has the overarching role to provide the necessary environment for everyone else to do their jobs. So one of the challenges that we have, and I don't have any updates, you can correct me if I'm wrong, whether it's Eva or Salim, but one of the issues that we have had is the major notification with FCC, where transactions which are at least $1.5 million have to go through FCC for review and approvals. And Kenya, I think, is close to 10 million. Yeah, Kenya is $10 million, almost 10 times what we have here. So that leaves you with a lot of transactions that don't necessarily need to go through KCC, I believe. Yeah, so this is one of the things that we recommend. Just increase the threshold to at least 10 million from 1.5 million, which we have now. I'm not sure whether there have been any changes on the investment regulations for the pension funds, but pension funds have been instrumental in building private equity and venture capital funds globally. I think globally 40% of all institutional investors for private equity funds are in pension funds. But in Tanzania, unfortunately, pension funds are prohibited by the regulations to invest in venture capital as an asset class. So if you're building a fund here and you want to raise money from pension funds as an institutional investor, there's no way they can cut you a check, because the regulations do not allow them to do that. I know there's a provision called unlisted equities, but the regulations say categorically don't invest in venture capital as an asset class, unless that has changed. My time is up? Okay. Two or 3 more slides. Of course, another thing is if you were to set up a fund, it has to be offshore. If you want to attract money from traditional private equity investors. For our case, we set it up in UAE, the Mbadala Impact Fund, because the investor wants you to set up a limited partnership structure, which you don't have here onshore. So you either have to go to Mauritius or you go to other markets. So one thing we are proposing is to see what can we do? I think Kenya has specific legislation for that. No? No. So what we are proposing is either we can review the Companies Act and add a chapter on allowing for this type of structures to be incorporated here and funds can be registered here. Rwanda has done through the Kigali International Financial Center. So now we can set up actually a venture capital fund in Rwanda. And tax relief, I know whenever we talk about taxes, you wake up with the sleeping demons. But I think there's a way you can do that. If you go to Mauritius today as a venture capital investor, if I invest in a startup, I won't pay corporate tax for the next 5 years. Why? Because I want to use the retained earnings to quickly scale that company for me to exit quickly. So those are things that I think we can do here. And lastly, we can set up a national government fund of funds that can be used as an institutional investor to invest in small micro funds that will invest in pre-seed and seed stage startup in Tanzania. Yeah, and this is my parting message specifically to the government. We have 50 plus funds that have been used to finance businesses of different sizes and different requirements. We have 10% from LGA each year collected and used to finance businesses. No feelings attached, but last time I asked who is managing these funds, I was told it's the community development officer of each LGA who is responsible for this 10%. So what I'm saying is, let's keep what we keep, but can we just take out part of that resources and have what we call the National Venture Capital Fund by the government with these resources as a fund of funds. And our companies, whether it's bankable, whether it's SSC Capital, whether it's Sarah Ventures, can apply as a fund manager. And because it's not easy to raise money internationally, I can tell you for a fact, we have been raising money for 3 years. And it's tough to raise money as a first-time fund manager from the United Republic of Tanzania, I can tell you. So if we can have a fund of funds by the government to provide at least some seed capital, say 5 billion shillings, is not much for a fund. That, of course, if you raise that, you can match that with international investor to build local funds. Unless we have our own funds here, I tell you for a fact, we'll still be playing some catch-up game moving forward. So we have fully developed document for this. We are happy to share with the government on how the fund can be structured, the size of the fund, ticket sizes. So we are proposing the fund to start at least with the 50 billion shillings, which is nothing, from our lovely government. And then, of course, that fund can do small tickets to sub-funds. And this is the structure that we are proposing, if you can see. And I think this will be my last slide, I guess. So what you see here is the fund that we are proposing. So at the top, we have the government fund of funds with 50 billion. And of course, that can also attract development partners to put more money into that fund. If the government says we're going to put that, I don't know, maybe 50% of that. And then that fund can have an advisory committee with people from the private sector as well who understand the market that can advise the fund. And we have a board, below which you have the board committees, which will work with all these sub-funds. So we're going to have 4 sub-funds. One is what we call a validation grant fund. The validation grant fund is used to finance pre-seed startups that need money for validation, not for commercialization. They are not at the product market fit yet, but who will finance these companies? So that's where we think we can use that fund. And this is a revolving fund. So let's put 50% of the money into that. And then, of course, we have the debt fund that will be used specifically for startups and SMEs that are looking for short-term financing. If you have a contract with the Hayat to supply as an SME and they'll pay you in 3 months, you don't need venture capital money. You just need a quick debt financing, a trade finance instrument, whatever type of working capital instrument that can be used to finance you and keep your equity. And if 80% of these transactions are rejected by banks, that's where we see we can get our solution from through government money. And then the equity fund, so this will invest purely equity, and that's where we can see the revolving nature of the fund, because if this fund exits at least 30% of its size, you can pro back all the proceeds from the exit of the fund into fund 2, fund 3, fund 4, so you keep on growing that fund as you go further. And then of course lastly, we can have a portion of it for blended finance where you can bring in other players and unlock private money. And at the end of the day, I think if we start with 50 billion, we'll be in a position to do much. So I won't have to say much. I just thought probably I could share 1 or 2 case studies. So Ghana has done that. So you can go and read about the Ghana model. And there's another model by the German government called Africa Grow Fund for first-time fund managers. And I think if we can do some of those instruments, put some resources, put some commitment, even if we implement 30-40% of that, I think we can lock a lot of transactions into startups in Tanzania and create more jobs and address the issue of 1 million youth coming to the market every year by building their own businesses and finance them innovatively and alternatively. Thank you.
Thank you, Salam. No problem. Thank you very much. Before we go to the next session, would like to acknowledge the presence of our guest of honor, Honorable Lawrence Mafuru, Deputy PS, Ministry of Finance and Planning. Karibu sana. So we would welcome 2 questions for Salim, if there's any. Do we have any questions? Okay. That was brilliant. Everybody got everything. It's absolutely brilliant. I think we did. I got a few things about alternative financing, and now that we know that the traditional financing models are stringent, not working, not supportive for most of the sector, especially pre-seed, we need to advocate more on alternative financing. It's not only essential, it's absolutely vital for the ecosystem. So let's keep that in mind. If there's any bankers in the room, NMB, thanks for their support in this, but also more needs to be done to allow for the sector to thrive and grow. Now, our next presentation is from Madam Eva Warigia. I hope I'm pronouncing that correctly. The CEO of East Africa Private Equity Venture Capital Association. Her topic will be collaboration and partnerships in building the VC ecosystem in the region. Absolutely vital topic. Karibu sana, Eva.
Morning. My name, can you hear me all right? Good. So it's such a pleasure to be back. My name is Eva Warigia. I am the head of the East Africa Private Equity and Venture Capital Association. We are the umbrella body for private equity and venture capital investors in East Africa with a mandate of linking capital to opportunities on the ground. I have spoken to so many of you in the last 2 years on Zoom. We have never met in person. I think I met CK for the first time on Zoom. So it's such a pleasure to connect in person after so long. I'd like to also acknowledge Honorable Lawrence and again appreciate the TSA's invitation to come as a partner to what you're trying to achieve here. I will not be long in my comments, largely because Salum was very articulate, and it helps that he went before me because he's addressed a lot of the issues that I was going to present on in terms of fostering partnership and collaboration for alternative financing. So my role here is just to set stage. I will not project. It's more like a conversation, all right? about what's happening in the venture space. A lot of it was in Salom's presentation. Hopefully, Salom, you can share it with everyone. I don't know. Copyright is a big deal these days. So, yeah, you can make some money out of that because it was really nice. But just give a context of where we are as an investment community, what the investors are thinking about with regards to East Africa, Tanzania, and how can we build partnerships. And again, I'll draw a lot of my reference from Salom's presentation, in part because he's the local expert as far as I am concerned. All right. So, what's interesting is private equity, at least private equity, venture capital, alternative financing is just about 20 years old in East Africa. The first funds came in 2000. Remember when Africa was rising? Whether it's still rising, it's debatable. But that was the onset of private capital. So being in the year 2020 is just about 20 years old. So first fund, structured fund cycle. So of course we had the DFIs here, the direct investment. So I remember the first funds were probably Actis, which is backed by now called BII, British International Investment, and we were largely doing property in East Africa. We had heavy infrastructure, energy, roads. Today we have 400 funds in Africa, about 142 with investments in East Africa. Which makes this after South Africa the second most active region for private capital investment. Now, there's a reason for that. East Africa has some of the best weather on the continent. So a lot of the capital will come largely with their diplomatic agencies, and then every embassy has the mission, and then from that they will set off the offices. Many of you are from that mission, right? So they'll see the real need of capital and taking part in development, and then help us creating that development capital, and then that's how we end up 142. Yeah. So the other interesting thing is the distribution of that is not really across the East African region. Many of them tend to sit in Kenya, which also explains why there's a lot of deal activity. And so this is my first point for partnership for the government. Officials in the room. How do we make Tanzania attractive that someone wants to move their entire family from Zurich to come and sit in Dar es Salaam? Because they could invest, they sit largely because they have eyes and ears on the ground all the time. Okay, so that's the other thing. Of course, there are markets that are a bit interesting. Ethiopia, for instance, is the only country in East Africa that has country-focused funds, where locals like Salom created a fund specific for investing in that market. It is a market with its own nuances. The birr is not tied to any of the regional currencies, so it helps to have a local partner who understands that market. But it's also a learning point for us. How can we build a country-focused funds, and is there room for those in Tanzania? Today, I have 3 Ethiopia country-focused funds in my network. And again, it's largely because of the nuances of that market. It works for them. But I think Tanzania is much more integrated to the region than they are, which means probably you may not need them as much, but there's also room for that to be considered. And Salom is raising a fund, so maybe he can do that. The other thing is impact funds. Again, because a lot of the capital coming into East Africa is development-led, we tend to have a lot of impact-focused funds. Per my count, East Africa, largely Nairobi, has the largest housing kick-out of impact funds on the continent at 46. That's the number of shops that are there on the ground. And now what's interesting is as we get into the era of green and climate financing, we are going to see a lot more impact-focused funds. Is this an opportunity that the government of Tanzania, that the ecosystem of Tanzania wants to take part in? Something to be considered. There's a lot more capital, again, coming from the development agencies. governments like the Swedes, Denmark, they're very clear. Any bilateral investments going forward will have to have a green angle. So how do we capitalize on some of this? Yeah. So some pointers to note. So what's driving private investing in Africa? Again, Salom has touched on a lot of those. And for Africa, it's the same thing as what we're seeing in our own markets, Kenya, Uganda, Tanzania, Ethiopia, Rwanda. The number one driver of capital inflows today is technology. So again, as players in the public and private sector space, how can we capitalize on that? I was in Ethiopia last week, and something interesting I learned. We know of that market, or every time we hear about Ethiopia, we hear about it being a closed market. But when Safaricom of Kenya invested in that country, the local telcos realized competition had arrived, and they wanted to tap into the startup ecosystem. So much like many of us in the room who've always asked government for favors, and then they keep telling us to wait or all those things. It was the same case for the startups there. They needed payments to be integrated to the mobile platforms in that country. And tech is one of the regulated agencies. But the moment a competitor came in, we see that the local telcos are actually investing infrastructure into startups. So when we talk about partnership between private sector, public sector, the first thing we realize is the infrastructure will play a big role in attracting capital. Part of the reason, maybe say for Nigeria, Kenya has succeeded very well in pulling venture funding is because of the success of the mobile platform M-Pesa. Everyone knows that if I build a tech platform that is plugged into M-Pesa, at minimum, I have a guaranteed way of receiving funding from my market. And M-Pesa has about, 17 million customers. I could be wrong with that number. But that's infrastructure. Today, M-Pesa is not even a company. It's infrastructure upon which everyone else is building. When you talk about collaboration, how do we get similar infrastructure rolled out that the rest of the ecosystem can build upon? Nigeria is interesting because they don't have an M-Pesa, but then again, it has created a level playing field for everyone to thrive, which is why fintech is the number one sector of investment in Nigeria. So there's always room for growth, and I think infrastructure in technology is one of the quickest ways of partnership, working private sector, public sector, to build that, because once we have that infrastructure, all of us in the room have an avenue where we can grow business. The other thing driving private investing, the changes in policy. We are for the first time seeing regulators who are willing to sit across the table from startups, from innovators, to ask what challenges are you facing and how can we address this. I have to draw an example for regulators like central banks. In the age of digital currencies, they realized they had to shape up because that world was coming whether we like it or not. So for a market like Nigeria, we have the central bank digital currency regulatory framework that was rolled out in 2021. Kenya just released its first publication and invited stakeholders to comment on the same. So there's also room in collaboration through policy and designing a framework that will allow for all players to play within an even playing field. The other thing we can think about is sandboxes as a way to incentivize players, startups, SMEs to be comfortable to take the risks within a regulated environment. I think the CMA of Kenya, the SEC of Tunisia are some that have embraced sandboxes where they invite startups to take the risk within a controlled environment. And we're successful, then work with the rest of the investment providers to help build this. So I think CMA, not CMA necessarily, but regulatory sandboxes, I have seen it, at least for Kenya, there's one in the insurance sector, in the capital market sector for fintechs, those two. Central bank is also doing its own. And you can appreciate that the financial service sector is the highest regulated one, so it makes sense for the regulators in that space to do a sandbox. What I don't like in that market, and hopefully Tanzania can do better, is create a single sandbox so that you don't have to deal with 3 regulators if you're doing a fintech. Can we just have one entity? If it's the National Bank of Tanzania, like, or the CMA, let's have one regulator doing all the fintech sandboxes, versus imagine if you're an insurance or an insurtech that has to do an app that has asset management or investing, has to do insurance, has to do trading. You have to deal with three regulators, and it's tedious. So one proposal possibly, as we go forward in unlocking alternative financing and building a better ecosystem for Tanzania, let's learn from the mistakes of those markets. Let's create a single hub for sandboxes, and maybe TSA can be the place that you house them, as seeing as it's already advancing these discussions. And then the last one is known to all of us, is the demographic dividends or advantage that comes with our young population. I think everyone's excited at the prospect of Africa's young youth and what they can do. And to be honest, they are the people who are engineering the innovation across the continent, including in Tanzania. And I think as much as we can, let's back them, because there's a lot of opportunities there. So the next bit I wanted to talk about is the stages of funding as we see it in East Africa. Salome mentioned quite a bit. So there's different levels for SMEs and startups. We tend not to treat them the same, but sometimes a startup is an SME, or a startup is an aspiring SME. So if I start with the startup funding, that's the most active funding we have in East Africa to date. Per my count, last year I had about 56 deals in 2021, just off of COVID times, and of those, the bulk of them were in startup funding. Traditional growth PE, as we know it in manufacturing, in financial services, had less than 15% of those deals. So where is this money going into? So stages of startup funding, if I can just dwell on them. Pre-seed, I think, is known to some of us, where it's the introductory round as you test the concept. Target investors are, as were mentioned, the 3 Fs. And then the seed round, this is where now we're starting to see activity from institutional capital as well as angel investors. The seed round is the one that's supporting market and customer acquisition as well as product refinement. I think Ramani just said they are raising a seed round, or have raised a seed round. And then we get into the pre-series rounds, which are short-term working capital funding rounds on their way to main series stages. So for pre-series rounds, we tend to get bridge financing. That's an area where traditional capital like banks can actually take part, because a lot of them just want enough runway to raise the main strategic capital. So again, if we look at ways of collaborating, there's room for banks to play in facilitating working capital as a company is looking to fundraise in a main series round. And then I think what's most popular for Africa to date is the series rounds, where we are getting formalized financing for our startups. These are the big rounds that make the TechCrunch news, in quotes. Flutterwave at 3.2 billion valuation, raising $1 billion, and then $1 billion, or 130 million US dollars, and then you realize that's a 3-year-old company. So that's where now you start seeing the big VCs coming in. And the reason I raised this funding, I mentioned all of these funding rounds, is because the profile of the investor in each of those levels is different. For the pre-seed, which is the prototyping, proof of concept stage, a lot of it is local money. It's the family, it's the friends, maybe not the fools, yeah? Family, friends, I'll say, and the grants, yeah? And this is local capital. This is Tanzania shillings. So before we get the big dollars that we see on TechCrunch, we first need to absorb, we first need our own capital to back that company. Without it, that business will not make it to those big cycles. So again, as we talk about partnerships, what are we doing to incentivize this early stage round investors to back our young companies? At seed round, you'll get the angel investors. Again, they'll be local because angels tend to be individuals, and it's often someone who has experience working in that market. What are we doing to incentivize the angel investor? And then the small venture funds and the grant providers in our market. Okay. And then through the seed series, the pre-series series rounds into the growth PE and growth VC and growth PE rounds, we start getting institutional capital. A lot of that, sadly, for East Africa is still very foreign capital. So what, again, are we doing to incentivize an environment that makes Tanzania the go-to hub for this capital? I'll say for PE at least, and Salom's presentation towards the end showed a list of companies that are PE, a list of Tanzanian PE-backed companies. Traditional growth PE has no problem finding deals in Tanzania. Traditional growth PE loves Tanzania. And you may not appreciate just how unique this market is. You are between the ESC and the SADC. That is access to over 10 markets. When I invest in a manufacturing company, a financial service company, a logistics company in Tanzania, I have access to anything from Ethiopia through to South Africa. It's only Tanzania within this region that has that advantage. Growth PE loves this place. Yeah. So how do we retain it? How do we make sure that if that is an opportunity that they can tap into, they stop setting up shop in Nairobi and come here? Yeah. But if growth PE is as successful in finding deals, what can we do to incentivize the upcoming very robust venture here? Again, it starts with the digital infrastructure, the policy environment and sandboxes. As much as you've invested in telling the story of Tanzania as a hub for manufacturing, and you have very good manufacturing companies here, by the way, and hospitality. As much as we've done a good job of profiling those traditional sectors, there is a lot more that we can do in profiling the startup ecosystem of Tanzania. So if I go through the trends in startup funding, they change every day. So at the beginning of the year, what we were seeing, at least for EAVCA, was a lot of international capital coming to lead series rounds in our startup ecosystem. I got for the first time Tiger Global, one of the largest out of the US, investing in a Kenyan startup. That was in March. Today, 2 months later, they are holding back, and it's back to local investors leading. And I think for those who are actively involved in that space, you've seen the tech crunch in the US market, which has directly affected the venture ecosystem in the US. And the US is the leading venture market, which means all of that capital that was previously looking for competitive markets in frontiers like ours is now holding back. And they are having at the moment to do damage control. So what does that mean? We will have in the next 3 months, they just invested. So for anyone who's doing a round right now and probably into the end of 2020, they'll have a tougher time convincing the US investor about the opportunities on the ground, which means, again, how do we unlock local capital? And not necessarily local in the sense of African, Tanzanian capital, but also the players who are already on the continent. What are we doing to incentivize them? When Tiger Global leads a round with $10 million for a startup that's 3 years old, no one, at least not many of us on the continent, can compete. But it's also very easy for them to pull back, as we've just seen in the last few weeks. So they will create a very real gap as the US market recoils or reconfigures itself, that it's upon us who are on the ground to start thinking of ways to fill it. And that's where now the types of capital that Salom talked about, the corporate venture, blended financing comes to play, because we know this market. This market needs our capital. Our startup shouldn't have to extend its fundraising just because the target audience in the US is having issues. it's upon us to build this ecosystem so that the next time they come, they are also not having to lead rounds. There's a consequence of those investors leading rounds. They overvalue our businesses, and it's almost hard for us to recorrect what they do. So how do we create that infrastructure? So to date, as we see it, venture, as at April at least, there was a shift where we had a lot more of the local capital providers. Oh, you told me I had 45 minutes. There's a time when the international capital was leading rounds. We are likely to see local capital, local here in the sense of African-based venture funds resuming their position as leaders of the rounds. Current structures available for funding for startup companies and SMEs. Salom mentioned them in detail, but I'll just go through. Impact investors, they are more palatable to risky investments and proof of concept levels. Angel investors, venture debt, venture capital, private equity, and crowdfunding. And Salom was very detailed. So because I've been told I have a time constraint, I'll just go into ecosystem considerations of areas of collaboration. One is policy. At the end of the day, every business, a startup or established company operates within a regulated environment. Regulated in that every business needs a permit of whatever nature. So the policy framework determines where the capital flows. And in as much as people may want to compare it with Kenya, I would like us to look at Tunisia. Tunisia has done an excellent job in attracting and protecting the startup ecosystem. I hope we can, as East Africans, benchmark against Tunisia and probably do something better. What the government there did is they call it Smart Capital or Smart Hub. So it started as a hub where they build the regulatory framework, and then they built an accelerator framework, and then eventually created a government-sponsored fund to back startups. It's a model that should work in East Africa. It's a model that should work in Tanzania as part of our own government supporting and funding startups. I talked about regulatory sandboxes. Can we get the regulator to provide a conducive environment? Someone once told me that a startup thinks of the regulator as the last person to tell, because the first thing when you talk to a regulator is they think of all the constraints and all the things that you're doing wrong. Can we reverse that, where the regulator is the policeman, and have the regulator as a partner? Because then we are able to build products that work for us and at least go to market a lot faster. In terms of fundraising, I won't again spend much time on this, but some ecosystem consideration here is how to unlock local capital. I'm a big driver of it will take Africa, it will take Tanzania to support its own for the rest of the world to back us. If I use the example of the creative culture, again, it's a space I've recently come to appreciate. The reason we have superstars in terms of musicians on the continent, it's because we first listened to their music. We first consumed and accepted their product. Why can't we translate the same in business? We consume the startup product, we back the startup product. By the time the local musician is going out on a global stage, the world has no option but to take notice and give them the best because they were first accepted at home. We need to translate the same into startups. So backing locals, let's bring back the pension fund allocation to private equity and venture capital. Pension funds have a mandate to invest and grow their funding. If private capital is where people are making 30x returns, why is that 30x going to the US? Why can't we get that for our pension or insurance companies? At the same time, our governments give a lot of money. Our governments are very good at giving money, but we don't give it to the institution that has actually proved itself. So there's a question of how do we monitor the success of this money? Is there room to create a structured fund? Again, drawing from Tunisia's Smart Capital, Ghana also has a Ghana Venture Fund. Rwanda has a $40 million Rwanda Innovation Fund. They raised $10 million from the Rwanda government. AFDB gave them 30. And that's what Salom was talking about, getting a fund that crowds in funding. And the Rwanda Innovation Fund is actually not, it's invested, it has a private fund manager. But this is one way where we can create accountability in the funding that government gives to the citizen. It's very clear. If there's a startup that here becomes a unicorn that originated from that system, then we can see the fruit of that. Finally, around fundraising, local capital is cheap capital. A lot of my investors in my network will have hard currency investments. They're bringing dollars to an entity that's earning in Tanzania shillings. There's already a risk element put into that investment. If we can unlock the local capital, whether it's an angel, whether it's an institution like an insurance firm or a CVC, corporate venture fund, it helps us to mitigate the risks allocated to investing in Tanzanian businesses. So this is my plight to everyone in the room. Let's do more to unlock local funding because it de-risks our investment. So when you talk about collaboration, I think policy at EAVCA, we are very active in working with the regulators. The CMEs across the region tend to be our best friends because they're also the people who regulate the investment industry. Just because policy has a big impact on how people will raise money. If we don't have an allocation for pension investing in PE, the next time Salom goes to fundraise, they'll tell him, my regulator has told me not to touch you. So, and then from that, there's a catalyst effect on where the money ends up going. And there's a lot of policy work we can do. I've talked about the sandboxes. I've talked about unlocking local capital. Startup legislation. We have startup bills in Nigeria, Ethiopia, Kenya, Tunisia, South Africa. Is there a way we can have a startup bill or startup regulation in whatever format dedicated to supporting the ecosystem here? And then another area of collaboration, as I see it, is in investment. At EAVCA, we are committed to work with the local entities, TSA, local banks to see how we can crowd in more of the local capital because, again, our mission is to de-risk the East African ecosystem, including the businesses that operate here. So let's look at what we have and see how we can match local opportunities to affordable capital. And I mentioned examples of creating a development bank, possibly doing more in terms of stakeholder education to sensitize on corporate venture. And then finally, it's just to say thank you so much for having us. Again, I reiterate that we have a mandate to work in this ecosystem. And so now that the world is opened up, I'm looking forward to working with all of you and just to help unlock this market. I think there's a misconception that Kenya is a favored destination. It's not true, actually. People just have offices there. A lot of them tend to invest in Nigeria. I actually have a problem with that myself. I don't understand why a PE fund with no office in Nigeria is still leading the round there. But again, I think we need to own our stories. We need to tell our stories as a Tanzanian ecosystem. The one thing I have learned is, as East Africans, we are very conservative and it's not doing us any favors. Part of the reason we see Nigeria and Egypt going up there is because they are very good in telling their story. Can we change the narrative of East Africa? Can we change the narrative of the potential here? Nigeria just needs to say we are a market of 200 million people and every funder takes notice. I think we have a lot more to offer as a region. If I use the example of Tanzania again, which is where I started, the number of industries that can be supported in this market are so many, and no one is telling that story. I would love to tell that story, but I also need your help. Thank you.
Thank you very, very much. That was absolutely insightful. Thank you. Lots of learning on that. Regulators need to be our partners and stop policing. Imagine if we would work closely with TSCRIA and the rest of them. That would be a whole lot more interesting. Again, backing our own first. Imagine if we supported our own initiatives, our own tech companies as much as we support Diamond and all the other parts in the musicians, in the music and talent sectors. How will that work for Tanzania? What will that mean for Tanzania? We are very, very good in flying our flag on the talent part, but let us do the same as well on different initiatives like VC. Regulatory framework, yeah, that's our story. Needs loads of work to be done on the regulatory framework, which is vital for this to thrive, but also to change how we tell our story. I mean, this is a major learning. I remember translating this from my own learnings on how I worked with the Irish embassy back in one time, and in the 70s, the Irish were in the back end of the class in terms of development in Europe. And now they are the leaders of the class, and this we're also being challenged. How do you tell that story? How do you communicate that change? How can we do the same for Tanzania, especially in the capital raising sector? Now, our next session is a panel discussion that will be led by Ivan Tarimo. I'd like to call Ivan. Thanks, Ivan. The panel discussion will be discussing on a way forward for harnessing public-private partnerships to establish and operationalize innovative and alternative financing for SMEs and startups in Tanzania. I hand over the mic to Ivan. Karibu.
Okay, thank you very much, CK. Good morning, everyone. Let me also take this opportunity to thank the two presenters. Salum, always very, very great to hear you. I always learn something new whenever you speak. So Salum has been the voice in the wilderness for us here on all of these issues. And good to also have his fellow voice in the wilderness for the East Africa area in EVA. So also thank you very much for your discussion points. And I think most of our questions will come from there. So I would like to quickly call up the panelists that we'll have, 3 panelists with us today. And we'll probably have 2 or 3 rounds of questions, very quick fire questions for them to just going a bit deeper into what they discussed. So Salum, can I please have you up here? Eva as well, and Ian, please, if I can have you up here as well from Ramani. And as they're coming, let me also thank and acknowledge obviously the presence of Mr. Mkama of CMSA, and of course Lawrence Mafuru from the Ministry of Finance on the government side. Mr. Mkama, I know he looks very tough, but he really has a very soft spot for innovation. So just try him, test him. You'll be surprised at the answers you'll get. So just a call for all of those guys who are looking at introducing their products there. Okay, so I think our topic is to discuss sort of the way forward. Yeah? How do we bring together the public stakeholders, private, in trying to get innovative financing solutions forward so that we ensure we do have financing available to the startups and the SMEs. Already some of the key themes that I've picked up from the very good presentations are, number one, we can't solve for the employment issue if we can't solve for access to capital for SMEs and startups. We cannot solve for one without solving for the other. In fact, it may be easier to solve for the latter in order to sort out the former. So I think that's very important, and that's a theme that came out from the discussions here. And number 2, the theme that came out as well is that for an initial start to a fund that can catalyze the way forward, we have the resources already internally. We have the funding around, it's in different areas, it's in different pockets, it's in different funds, it's in different rules and regulations. We need to find ways to channel it together into one big pot where we can apply these rules and legislations and allow that then to catalyze the way forward. So these are 2 key things that I've picked up, but I now want to sort of get into them a bit deeper. Ian, we'll start with you, partly because we've already heard from the other two. And you're SME on the ground. You're sort of where the rubber meets the road when we're speaking here. So first of all, if you can tell us briefly about Ramani. And if you want to make the private public, you can. But then what we really want to hear is, in your quest for financing, what did the traditional financiers not really understand about you? But also, what did you not understand about that process? Thank you.
Hello. Hi. Hello, everybody. First, let me say thank you for this opportunity to tell our story. So we're a very private company. So I want to share a little bit about ourselves, but let me see which snippets. Let me share maybe a little bit about just overall what we do. So today what Ramani does is we partner with category leading brands like Coca-Cola, for example, or Tanga Fresh. And we say, hey, listen, your distributors can't get financing to grow from banks. So what we're going to do, we have financial muscle. We're going to step in between you and your network. We're going to buy inventory for them in advance, supply it to them, allow them to sell, and they'll pay us in 7 days, 10 days, 30 days. And this allows them to grow, meet the market demand. And it allows us, of course, we make a little bit of margin by empowering those distributors. We use technology to manage. There, of course, there's a bit of risk in that because we provide them inventory before they pay. So we manage that risk using technology. We came with this insight and launched in January 2021. Since then, we've done over $13 million in inventory supply in those 15, 16 months. Our business is doubling every 2 months, and it's been doubling every 2 months for the last 15 months. We've raised about $6 million to date in equity and debt financing from international investors like Village Global, that's backed by Mark Zuckerberg and Bill Gates and Jeff Bezos, Y Combinator, of course, in Africa, Launch Africa, Future Africa, Rabbit Capital, in the US, Flex Capital, Gold Capital. So quite a few investors. You know, it's been a tough journey, but we're very lucky to have reached the point that we have reached. Now, interestingly, the problem that we're solving for our customers, you said, what do we not get from? First of all, is that clear for everybody? What we do, our progress, yeah? Okay. So how do we get here, and what was lacking in the market? Actually, the problem that we're solving was we're solving this sort of access to growth. Let's call it growth resources. In this case, it's inventory for SMBs, and we're solving that problem because we had that problem ourselves. So the way Ramani started actually was that we were distributors ourselves, and we used technology to manage our distribution network, and that's actually how we got into Y Combinator. We're growing really fast, and we had to buy our inventory with cash, and and you're growing so fast, now you're tapping out of your inventory. And then we went to banks. I think everybody's sort of done this walk, and we're like, hey, we're growing really fast. And at the time, we were actually very lucky. We had collateral, so we actually had a deed. And so we went to certain banks, and we're like, we'd love a loan in order to finance inventory so that we can continue to grow. And we said, and we have collateral. I mean, it's a done deal, right? And they said, no, your business is too young. You're under a year old. You'll never get a loan in Tanzania if you're under a year old, etc. And it was so tough for us. We do a little bit of research, and we find actually in Africa, there's a $360 billion financing gap for SMEs, and that's according to the World Bank. And to us, that was an opportunity. So we flipped it. We said, if this is our problem, it's other people's problems. So how do we create technology and services to allow other SMEs to grow? And that's how we've reached where we are.
Thank you very much, Ian. Thank you very much. Fascinating. Thank you for that, Ian, and really setting the scene. Now, I want to move one seat down to Salum. Salum, you raised an interesting possible solution with the fund of funds, but I take that more generally to mean. Thank you. I take the concept to mean we need to, again, pull resources together into some kind of general global fund locally, obviously requiring some recognition, input, and stewardship of the government to then sort of push on in terms of creating some of these avenues. Now, the LGA cash, it's a lot of it. I mean, it's 10%. I mean, maybe Mr. Mafuru will confirm later. I think LGAs may collect 1.2 trillion a year. So 10% of that is already 120B. That already every year is passing through somewhere. It's happening. So these are the kind of funds we're talking about. Now, knowing that we may not go from zero to that at once, what are some of the baby steps we need to make in trying to make this fund a reality?
Wow. Okay. So I think for me is if I were to make my specific references to the idea of fund of funds. So I don't want to talk about the legal structures now on how we could structure that. But for me, I think the easiest way to do that will be to at least take one or two LGAs initially and tap their resources and pilot that model and build the sub funds, which I mentioned earlier. And I mentioned 4 sub funds. So one is validation grant. So if Ramani was at validation stage, they could easily go to that fund and be validated before they go to traditional VC money. Then we have an equity fund, which would fund pre-seed businesses which can hardly raise money from the traditional VCs again. And then, of course, there's a debt fund, which will now finance such trade finance deficit, which I mentioned earlier. Or if you want to growth capital. And it probably is going to take a while for him to raise from his VCs for VC backed debt. He may use that fund as well. And lastly, of course, to build an instrument that can blend between the government money, donors' money, and private equity money. So you have the angel investors here who are still shivering to cut their checks. They can get some sort of 50% first loss guarantee by using that. So for me, I think if you give me 10 billion shillings today, I make that happen in the next 3 months.
Great. They've heard you. Thank you very much, Salum. And Eva, just building up on that, because I think you mentioned a name during your presentation. I forgot. I think, is it Tuaweza or Tuliza? Something in Kenya, which was a similar, I forgot the name, but a similar fund that was started or a process that came to allow to support startups. This is Tunisian. Okay. So maybe if you can just talk us through that and how that helped. And maybe from your experience working around the region, where progress is made, what's the key critical missing piece? I mean, have other countries had a special ministry of startups, or has there been an MP of crowdfunding? I mean, what's that extra source? What is that's missing from the equation?
I think I was even more curious to hear about
Romani.
Yeah, Romani. My question is, since the banks...
Wait. I asked the questions.
No, it was just,
Okay, no, go ahead.
Yeah, I wanted to know whether the banks are now coming to you for your $6 million. Do they want to bank with you? But anyway.
I could see the NMB guy rubbing his hands as speaking. So I think they're coming. Okay, go ahead.
What's the missing source? The fund I mentioned, Smart Capital, is actually Tunisian. And Tunisia decided that tech and innovation was going to be a government strategy. I think some of our governments have manufacturing and something else. Them, it was tech and innovation. So that was first place. And then yes, they actually do have a minister of innovation. And from there, they realized they needed to build an ecosystem around it, similar to what Salom is proposing. They first started with a regulatory framework. They are government. They are in the business of regulation. Look at what works. And what it would take to succeed. So they created the startup hub. So it's sort of like a special economic zone, but for innovation and disruption, where anything goes. And from there, then they do the regulation that enables that ecosystem to thrive. Like everything goes. And then from the regulation, the next thing they did was to create an accelerator fund. So we have the enabling environment, because that's what regulation is about. Then we do the funding. So the startups come, we realize they still need the capital. So we are government. We need to catalyze our own businesses. Innovation is a strategy. Let's put our money, skin in the game. So they did that. They did the first loss technical assistance accelerator fund. That. So the companies that then were successful of that, the Ramani types, would then they now then set up a very commercial fund, again, government sponsored, and that fund then managed to raise money from AFDB, the French Development Agency, AFB, and the European Investment Bank. So it's about $100 million, but the original investor was the government of Tunisia. So they have an accelerator technical assistant fund. Some companies will emerge as superstars in that Ramani type. Those ones get then the funding, the very commercial funding. And what it means then is by the time this company is going into the US market, it has a solid backer. I mean, think about it. If you can be able to sit in a room and say, I am sponsored by the government, what it tells me as an investor is regulation is not a challenge, because they are part of your shareholders. It's in their interest for you to succeed, right? So it's more incentivizing for that for the investor, where that framework exists, for me to put money in a company like that. And then it's no surprise that then from that you see Egypt coming from nowhere to become the second largest company market for venture funding. But also I think Tunisia is one market we can look forward to in coming years as a source of very good quality pipeline of startups. So, and then, yeah, in East Africa, Rwanda has done the same. I think we are all aware of the Kigali International Financial Center. They're trying to do the same thing. Rwanda's specialization is fintech. So they're again doing something similar. But then there's a lot more all of our countries. Tanzania can borrow from that and do something else. If it's supply chain, again, I think you have a very robust manufacturing industry here. So how do you capitalize on tech to leapfrog some of those traditional sectors? But short answer is, I think we need to get our own skin in the game. Every time I raise money or I speak about East Africa, people ask me, so what are you doing as countries? You're raising money from the IFC, the World Bank, all those other DFIs, but that's those other governments' money. Where is our own government's money?
Okay, thank you very much. And on the very good point around the government sponsorship, I'm going back to Ian, is when you saw the problem that was there, and obviously in trying to solve for that problem, created the concept for your company. One place that I see there are a lot of problems that could be solved by technology is within government itself, right? Within the institutions, within some of the agencies, etc., etc. What I've noted often is that they tend to prefer some sort of homegrown internal solution, where maybe the IT department tries and creates something, which obviously then can't be scaled to the market as a product. I mean, if we go back to maybe the stories of how the internet came about, and whether if it's, I don't know if it's US military or not, if it's true, if it's conspiracy theories, if that then didn't sort of go out and reach market, how that would work. But what have you seen in that space? Do you think perhaps, I mean, with that mindset, if you went to NSSF and heard some of the problems they had, you'd probably be able to come up with various number of tech solutions that you could probably then create and then obviously scale across others as well. What has been your interaction on things such as this?
Yeah. So we don't, our personal experiences, we don't go to the government. Government is not our customer. So I can't speak from personal experience about how hard it is to sell to the government or, outsource solutions versus internal solutions. But there was something interesting that we found. So one of the essential parts of our infrastructure, how do we know sort of the performance of our distribution network, is that we actually process the receipts of our distributors, of our customers. And so what we've managed to do then is to replace the EFD machine, and we've integrated it into our CRM. And the only reason that's possible, and it's just like a stroke of luck, trust me, I tell people this and they're shocked, is because there's a government API open that we can integrate our platform into, and we could just, and we could just process receipts, I was telling I have a friend here visiting, we actually went to Stanford together. Hello, Brandon. I remember I was telling him this and he was like, your government has an open API for process receipts? I was like, yeah. And interestingly enough, we're launching in Kenya and we're trying to build out this infrastructure, and there's no open API. And it makes actually complicates our ability to roll out our technology. And so
Wanasema mnyonge mnyongeni haki yake mpeni. Yeah, open API, go.
And so it shouldn't surprise us because we have smart people here and people that understand technology and the power of APIs, which is you open up a platform and you enable businesses to build on top of that. And I think I would encourage those voices that are already in government clearly to speak louder and to continue to build these platforms that other businesses can build on top of. And that becomes a competitive advantage for us, again, just like Ramani's story. It's not quite the question you asked, but...
Yeah, but I think you bring out an interesting point with the open API and what that means to this community, this ecosystem, in terms of what it does reflect that openness in a certain respect, the government. Now, if only the checkbook could be as open as their APIs, so I think that's where we're trying. That's what we're trying to get to. Yeah. Saloom, apart from the fund of funds idea, which I think is something we need to take away, or a fund or a venture capital fund at a national level, if it's a test through one of the LGAs, especially maybe the DAO ones, which have a lot of cash and maybe have some change to spare. The idea of a special economic zone or a hub or a special location within Tanzania that can work as a catalyst, can geographically put some incentives to create now the opportunity to have some of the companies here, along with the legal structures. Is this possible? And are you thinking Zanzibar or Dodoma?
No, I think, first of all, I don't think if it's the good idea to build an ecosystem of players by pushing them to be in some specific place. I think ecosystems have grown naturally, and people tend to follow such ecosystems. I'm not sure whether Silicon Valley was built that way. It just grew, and people were moving from all parts of US going into Silicon Valley. Kenya has been trying to do, what's this project again? Silicon Savannah, and I think is yet to take off. So what we see...
That's a very creative name.
Yeah, so actually we have Silicon Da, by the way. We have Silicon Da, I think, is one thing Jumanne and Sahara has been spearheading, where the idea was not to have some place where you can push all players of the ecosystem, but let that place grow naturally. And I think they identified this strip between, is it Mwenge? Jumanne, up to Morocco. Yeah? So yeah, because naturally you would see telcos being there, and you have other startups probably setting up the offices there. You have Costech in that area as well. So naturally we can grow that. So I think the only thing you'll probably do is provide incentives to all developers in that area to provide some sort of special rates for other people to set up there. So advisors, you know, if a VC fund wants to set up an office here, they can have some sort of special benefits if they are to set up an office in that place. So naturally, you would see that place grows into, you know, wow, they intend to call it Silicon Valley. So for me, I'm not in favor of trying to push all people to go to some place, rather than just, you know, see one area which is naturally been growing and provide some incentives to unlock that area and to become the place that you want to be.
Sort of a gold rush. Yeah, thank you very much, Salum, for that insight. Last question for Eva, and then we'll go to a last round of just general actions forward for all the panelists. Eva, we heard about a certain valuation, I think, through one of the presentations, and I think one referred to, I think, Flutterwave, and there was money raised by another startup, Nala, etc. Now, these valuations tend to get a bit fuzzy at some point. Having done some valuations, the multiples get very crazy, meaning they're high at a certain point. What's driving these valuations, do you think? I mean, and when we think about these companies, what do we look at? Do we look at, is it potential? Is it cash flow? Is it what for just a layman person? If it was the NSSF, it was some investment managers, and what do you look at as potential for some of these companies, for Ian's company or the others? And how do the valuations get so high?
You would have an answer better than me, I think. I came from private equity. That's my background. So this venture world does not make sense even for me. Like, I don't understand how those valuations, but I have an inclination. I'll start by saying a lot of the time it's sentiment around the company, and sentiment is not objective. And again, maybe I shouldn't name, but yeah, I'm struggling. Fintechs in certain markets being at unicorn level, and you look at the infrastructure of that company, and it's just hype. It's hype around the personalities in that company, less so the fundamentals of that company. It's also hype around certain markets, less so about the actual work in those markets, or rather the actual market in a market. And sadly, we tend to be disadvantaged as a people of East Africa because we are not hype men. We don't shout our stories. He is still not talking about how much money he raised. Let me tell you, if you had people from West Africa, you would know to the decimal. So imagine the next time Tiger Global wants to do a round in Africa, they will look at whoever raised numbers that they can relate to, because sadly, Africa, we're so small by their percentages. A $10 million round is a rounded off figure for them, right? It's a lot for our startup. They don't care for that. But if someone's to write a $50 million check, they will go to a market that they have seen similar numbers. So Ramani, you are doing us a disservice by not sharing your story. So sentiment, a lot of it is sentiment, because he's doing amazing stuff. And then again, he's not in fintech. I mean, you actually technically are a fintech. But you're an... Yeah, fintech are just... Your core business is logistics, supply chain. It's more like supply chain management. Look at that. East Africa has diversity. He's supply chain. Nala is fintech. You have diversity. There's a market where 90% of the startups are one ecosystem, which also poses something about market risk. Yeah. So sentiment is one that I think we do ourselves a disservice by not telling our story. A challenge to myself as a regional representative, our government, and our startups. The second one, I think, is the economies of scale. Startups today are building for a global market, not a country, a local market. It helps to have a captive local market. So again, the reason Nigeria always wins is at minimum they have 200 million people. If you capture 10% of that market, you have captured 20 million people. That is like half of a country in East Africa. It's really literally half of Kenya. There's no way you're going to make a case to a VC that you're capturing at first try half of a country. So economies of scale also work in their advantage, which is why to counter that, as a startup in this room, think global from day one. We will be a bit disadvantaged as countries from this region because we don't have that kind of population. So you have to think of, I am solving for the world. I'm not solving for a Tanzanian audience. I am solving for the world. And the quicker you can do that, the better for you. Number 3 is as I have seen it, is the cost of customer acquisition. There's a difference between revenue and profitability. There's a lot of startups that come to market saying we anticipate to go to X number revenue, often a very big figure. But when you look at the bottom line and the cost of getting that revenue, you realize the margin is so slim, there's no way they'll ever make money in your lifetime as an investor in that company. So again, maybe focus less so, and this I guess are learnings of how to value these businesses. Focus less so as an investor. We focus less so on the revenue that the startup is selling us and look at the cost of acquiring that customer. If the system that you install day one is what you're going to use for the next 15 years, it means that the cost of acquiring that customer is significantly lower, and it makes sense for me to consider that business. So even if you have very high revenue projections, but every time you have to hire 10,000 sales agents to go to the grassroots, the margins are so slim, it doesn't make sense. So cost of the customer. Number 3, which is interesting, and I have learned this in recent times, that people look at the team and the quality of the team. Hello, Stanford people. So again, it's the team here is looked at in terms of their experience. And I don't think we are still yet at a place where as a continent we are investing in people right out of high school. A lot of them are looking at people who have worked in industry, gotten experience, and then ventured out. Some have unique experience of having gone into Ivy Leagues and gotten that global insight. Part of the reason Egypt is very successful in fundraising is many of those teams are ex-Google. I don't know what happened in Google, and a lot of them left to start companies. But the credibility of saying I am ex-Google gets someone to pay attention. Yeah. So if you can spend some time as you're considering starting up or partner with someone, even if it's as an advisory board member who has that quality experience, it really helps in your funding rounds because it shows you know what you're talking about at minimum. Yeah.
Thank you very much, Eva, in terms of the ecosystem and all these valuations come about. So we are about to wrap up our panel. And just to close things off, if I can get one comment or one or two from each panelists in terms of the way forward in your particular space, in order for us to see some of these changes we're looking for in terms of having more capital, more financing available to the SMEs and startups. Ian, from your point of view, as you move to other series, etc., what would be your advice or things that maybe we need to look at as the stakeholders are in this room? And of course, as well from Salum and then from Eva to close out for us.
What would be my advice? I think there's so many levers to pull. I would think on the government side, I think it would try to think through incentives that encourage people to be enterprising, to take risks, and to be rewarded for those risks. And some of those incentives could be things like tax credits, for example, for early stage startups. Or what I would love to see is tax credits for customers of early stage startups which would this was one of the first issues we had, getting your first customers. But if a big customer is being incentivized to work with a young company, it's good for the ecosystem. Then I get to say, you know, X and Y company is my customer, so it's good both ways. I think those are ways that we could incentivize people to look for, you know, those win-wins. Whereas right now, a lot of the incentives are about avoiding risk. Other areas are, I really love the opportunity for, in terms of open APIs. I know NMB, for example, has created open APIs, and they've actually been very nice. It's really fantastic. And they've been great with us. We've been to their offices, and we're actually there's no official. You know, they've been fantastic to us, and I think other businesses beyond banking, insurance companies, etc. The power of APIs is that, you know, other businesses can build services on top and embed your services within industries, you know, faster than you can. It's, you know, because they're actually applying their resources to your infrastructure, and then you get these sort of revenue share opportunities. I think those areas, I think you would see transformative impact. One is incentives and incentivizing enterprise, and two, platforms, open APIs that people can build on top of.
Fantastic. I think that's a very good policy or recommendations. Salum, over to you.
Yeah, so for me, I think I would still call on finding ways to build the local funds, especially for early stage investing. I don't see international investors bridging that gap. Small tickets, 50K, 100K, where a majority of early stage startups are raising. This money should come from here. And of course, that will build a pipeline of more deals to attract international money come to Tanzania. And I tell you, it's tough to be a Tanzanian fund which is incorporated in an offshore market. It's expensive. If you were to set up a fund here, incorporated under Dubai International Financial Center, the minimum license is $40,000, excluding legal fees and fees you're paying tax advisors and all that. So it becomes very expensive to set up a fund offshore and investing in Tanzania. And on top of that, you're investing in T shillings, and then you will have to, you know, return the investors' money in dollars. So any exchange rate exposures here will put you in a very tight position. So that's why I'm pushing for building our own mini local funds with T shilling backed investments, investing in early stage startups. And then these startups can, again, of course, at the later stage, go into international money. And for me, of course, I've just put government on the spot because I think there are a lot of resources which need to be tapped and reallocated. Actually, we're not creating new capital. It's the same capital which is in the market already. But all other players can do that as well. So if it's a donor program, let's see how can we capitalize on such programs and such in that money. If it is corporate, as what NMB did with 1 billion seed fund, how can we tap much more into corporate venture capital money? I know this. I don't know. I'm not sure with the stats. So Mafuru is here. I don't want to say numbers which I'm not sure of, but I heard SACCOS in Vikoba for excess of 2 trillion shillings. How can we tap maybe 5-10% of that money and reallocate into these funds? If it's pension funds, and of course, when I talk of pension funds, I know the structure of pension funds and the risk of pension funds. We're only saying, okay, maybe 1-2% of this money can be tapped into this fund. So my takeaway call for me is, let's put our efforts together. Let's build homegrown small funds, invest in early stage startups, and then we can build these startups to attract international money, and we can lock money for Tanzanian market that way.
Good. Thank you very much. On point as usual, Salum. I think just to add to what you said, the total, if you aggregate all the SACCOs, I think they're about bank number 3 in the market. I think slightly more than NBC, but less than the second bank there. I won't mention. Okay. Eva, you've given us, you said something during your presentation, which we look up to Nairobi so much when it comes to financial hub. I mean, we see them as you know, a few steps ahead of Dar or Tanzania in general, for obvious reasons. you did mention something that perhaps there are some challenges or there are things they've done right, maybe things they've not done right. So as you give us your, way forward or your action points, could you also just touch on that a little bit as well?
Yeah, sure. I think you were I referred to the bit where a startup has to deal with at minimum 3 sandboxes. If you can just learn from that and create a central one. But in general, what was the question?
What do you need to do?
Oh, yeah. What do you need to do? I think you're already on track. I didn't even know about the open API. I was surprised equally. Like, who allows for that? Yeah. So yeah, I think you're already on track. You clearly that's something that, again, going back to telling our stories, that is a story that needs to be out there. Imagine how many startups can then decide, maybe I should go into Tanzania and set it up there because my initial infrastructure cost is less, you see. So my parting shot is, and learning again from what Ian was saying, is let us just tell our stories. We are, and that's my day job, to tell the East Africa story, because what happens is from these stories, investors get to decide where to place their capital. We need to be more proud of the work our startups are doing. We need to shout about it. As an association, we collect data, we try and do research. I'm starting to do data, to aggregate data on the startup performance in the region, and would appreciate anyone just sending me any information every time we close a round, every time we do new developments. I'd be happy to do that, because I have a platform. I have a Pan-African platform. I will now brag. I have a global platform. I need to be able to tell the East African story. Enough of being a region that is still considered for M-Pesa. M-Pesa is 20 years old. Can we move on? Right? It's about time. And by telling these stories, we will make the next unicorns out of this region. And then finally, probably for the public sector in the room, there's a misconception that startups address an elite class of individuals. But it's actually wrong, because if you think of just the example on stage right now, Ramani is serving the underserved. So you might see Ian here, who's based in Dar es Salaam, who went to Stanford, and think that startups are for the elite. They are not. The underlying, the customer behind the startup is the mwananchi. So every time we think of incentives and then we dismiss them because those are serving a few elite companies, you are actually doing a disservice to the greater community these companies are supporting. Thank you.
Thank you very much. And on that note, if you could put applause together for the panelists again.
Oh, I forgot to have...
Sorry, one more thing. Yeah, go ahead.
And invite all of you. We have our 6th annual Private Capital in East Africa conference taking place 16th June. It's the first conference since COVID, so it will be in Nairobi, and I look forward to hosting all of you. We can meet on the site for details.
Thank you very much. Asante sana CK. I'll hand over back to you at this stage. Thank you very much. Ian, thank you, Salum, and Eva. Asante.
Thank you. Wow. So much to learn. I mean, yeah, thank you guys. Thank you so much to our panelists. Thank you to Ian, Mr. Ramani. Pleasure to know you and meet you. Thank you, Salum. Thank you, Eva. It's been absolutely brilliant. I am overwhelmed with so much knowledge right now. And again, I agree with you, Eva. We need to tell our story. We need to start bragging. I believe we have the bragging rights to the decimal. We need to communicate that better. We need to support our own. Again, startups are not just for the elite. To add to that, I actually just thought the conversation around startups is always just thought to be tech, fintech, tech something, tech this, tech that. There's just that. I mean, startups is anything. It's any business that is looking to serve a purpose or not, but it's a business from every sector, be it agricultural, logistics, service, whichever sector. It's not just about fintech. Today is not just about fintech. It's about every other sector, for every other business looking to fundraise and understanding how we can do this. So please, let's take away that thought from just about fintech, although we do have quite a lot of fintech gurus in here. So respect to all you guys. Okay, the next session that we are having now, just before we move on to what is being scheduled, I would like to invite, this is not on the schedule now, so forgive us for branching off a little bit, but we believe there's a bit of learning here that could benefit all of us. And this will come from Brandon Hill. Is Brandon Hill in the room? Is he? Brandon Hill? Hi, Brandon. How are you? Brandon is from the US, right? Karibu sana. We believe you have a startup, which is called Viro. Is that how we pronounce it? Vori. Okay, there we go. Another learning. You have just raised $10 million. Congratulations. Now, absolutely brilliant. What a space. I was wondering, Brandon, would you be so kind to just talk to us like 2 minutes? You know, how you've done it, your journey in an absolute sum, how you've done it, how you've been able to get to where you are, and what can we take from your story? Like just 2 minutes?
Sure. Should I come up?
Karibu, yes.
Hello, everyone. I was absolutely not expecting this spotlight, but it's a pleasure to be here. It's a pleasure to support my good friend and brother, Ian Usiri. Another round of applause for all the panelists and recipients. So my name is Brandon Hill. I hail from Minneapolis, Minnesota in the United States. I was educated at Stanford University, and I am CEO and co-founder of a startup called Vori. Now, Vori, we help American supermarkets buy, sell, and manage inventory that they procure from their hundreds of wholesale suppliers. And we built this startup because my parents themselves have been in the American grocery industry for over 40 years. In fact, they met and fell in love in an American grocery store. And so we've launched about 2 years ago, inspired by Ian, in fact, and we've grown from powering our first grocery store to over 500, and from processing our first order of $200 US dollars worth of kombucha to now almost $80 million in transactions on the platform. And we've just raised a $10 million Series A and have investors that include DoorDash, Instacart, Greylock Partners, and Y Combinator, and super inspired to be here and to be a part of this ecosystem and to continue to see it thrive. Thank you very much.
Thank you. Thank you very much, Brandon. It's brilliant to have you. Karibu sana. And we hope to hear more about your journey, how you've done it, and what we could learn from it. Karibu. Next on the agenda is we'd like to call our NMB representative, Christopher Mgani, to the stage, please, to give us a brief on the PLC Tech Hub that NMB is currently hosting. Karibu sana, Mr. Christopher.
What time is it? Okay. Good morning. So as first, I want to say thank you for this the invite to NMB. Also, I want to recognize the presence of some of the government members, of course, Honorable Mr. Mafuru, and the rest of the government members who are here today. I'm going to be short and clear in regards to what's been presented here. Now I understand why NMB was placed at one of the last presentations, because I'm sure, as said by many of you, is the need for banks to come into this space And I understand the need that's normally been presented is that most banks tend to shy away from startups. So without wasting any time, I would like to show a few slides here and then talk about the presence of NMB in the SME space, as well as the startups, and what are we doing so far, and what do we expect to achieve in the future. I'm not going to talk about the API because I'm sure most people have already discussed about it, but if you want to know more, I'm sure Josina will come and say something here today. So like my name was mentioned, Christopher Mgani, I look after the SME space at NMB. As you can see, most of the areas that we have done at NMB over the past 2 years, there's a lot of developments that have been done under the SME space. On the startup space, although as a bank does tend to have a little bit of difficulty in the end, however, there are solutions that we have come up during the past 2 years. So, next slide, please. Let's see. Okay, so in the sector performance, as I mentioned earlier, our SME space is where we as NMB, together with the personal banking, but in the SME space, we as NMB is the area that we like to, in the past 2 years, we've been focusing on at a very large scale. We have done a lot of products in that area, the likes of your traditional loans, overdrafts, letter of credits, and stuff like that. However, one of the challenges that we tend to notice in this space is that most of the people that we deal with is either they lack the know-how to intercept, or rather to sell their products, or rather sell their proposal to the bank, or they don't have enough collateral to bring towards the bank, as well as the experience, and so to say the startup. So we as a bank, we have come up with different types of solutions to solve these two elements, or rather three. In the issue of collateral, for example, we have come up with products that, as a person that requires financing, what we do is look after the requested product, and then we use that requested product to act as collateral. So, for example, in a way, it's more like a structural financing, the likes of the invoice financing and the likes of asset financing, as you see in the next slide, as well as the issues like big guarantees and LCs and stuff like that. Now just to emphasize on the fact, these products, over the course of the 3 years, we've witnessed that we are getting a lot of traction, and they've proven to be successful, as I will show in the next slide, in some of the income that we have been getting from the bank's performance as in the SME space. As you can see in that level there, that shows your performance. In the year 2020, there was a bit of a dip. Of course, that was due to the COVID-19 and some of the business challenges that we're facing. But as you can see in the 2021, there was a bit upside. And this is due to the products that we have structured in a way so that we can offer these solutions, like the things like, for example, to get away with collateral, that not such collateral to be requested, as well as to ensure that we have partnerships with some of the people that have been mentioned here, the likes of African Guarantee, that's AGF. You have the ATI. We have past guarantees in the agricultural space. So they've really proven to us to penetrate in that area, and hence you can see most of the income in that space. Again, that's the income performance over the course of the 3-year period. So, as I mentioned before, some of the things that are affecting the SME space, I talked about the human capital, I talked about the startup, business entrepreneurs because the lack of know-how and stuff like that. I talked about the inadequate capital injection, as well as the turnaround issue, for example, in processing their loans. As well, we have the shortage of strategic partnerships. Now, in the strategic partnerships, maybe I should stress on this, because in the SME and the startup space, our biggest challenges comes from the collateral shortages, the business know-how, as well as the, of course, and the knowledge or the capital to be injected. What we have done is that we have entered partnerships in some of the strategic institutions. For example, last year we entered into the mining space, and we know most of the players in the mining space do lack those three things. So among the partnerships that we have done is we have entered into a partner with Stamico. Right now we are in discussion with University of Dar es Salaam so we can get expertise in that space. And what we understand is that by gaining such experience, we are able to go and penetrate the need for credit for those people who are lacking rather the experience or rather lacking the enough collateral so they can penetrate in the credit space. So with these partnerships, we are confident that we'll be able to achieve that that target. Also, another issue that tends to affect for us the penetration through the SME is the government, of course, the regulations and stuff like that. And I just want to emphasize on the fact one of the core I would say KPIs for any commercial bank, let alone NMB, is to ensure that we penetrate the access to credit to the private institution goes at a very high rate, that the attrition space. So the challenge that we normally face here, because we are dealing with a lot of stakeholders in the government, when I say stakeholders, I mean the BRELA, the Ministry of Land, and all sorts of, or even the legal framework. We do tend to experience that there are some issues that do clog the whole process of access to credit. So although we are still in discussions to ensure that we harmonize such process, that everybody gets that harmonizing experience. Now, I'd like to jump into, of course, as most of you have tend to rather hear out, is that default for SMEs, or rather, why do banks tend to shy away from that space? Now, maybe just to be, or rather to be truthful, is that in the startup space, a lot of we not us as a bank, but most of the commercial banks do try to enter and they burn their fingers. And the reason being is that most of them, as the ones that you've seen here, is that there's a diversion of funds. Do people tend to go into something that they feel is much more secure, or rather there's underfinancing, there's the issue of delay, of course, in the payment from key dealers, and failure to mobilize funds, as well as challenges in logistics. Now, I did talk about one of the solutions that we as NMB do tend is to try to tackle these defaulting problems, is that we also do things called scheme financing, such that the recourse on the borrower do tend to go to the anchor client. So for example, if you have Coca-Cola or any other anchor client that tends to service distributors and stuff like that. So instead of asking for collateral, or instead of seeking capital, or rather assurance of your payment, we do tend to see that although we are financing someone who's servicing the anchor, we do a recourse on that anchor being a blue chip company. So that gives us an assurance that you receive your payment on time, and hence our credit will be serviced on time. So that's on the reasons in the defaults by SME. Now, How do we mitigate those factors? Of course, some of these things I've already talked about. We have, what we have done is, for example, just a second, sorry. So, for example, the issue of adequate collateral. Of course, I understand that also is part of the startup problem that we normally have. Another issue is to have strategic partnerships or private partnerships. I did talk about the AGF. I talked about ATI. I talked about PAS. So, so for example, one of the segments that we normally do is on the construction side. For those small contractors, the likes of lower classes, whereby we do not request for any security, normally because we already have an agreement with these AGF and ATI. So as long as we're in that segment and we have a guarantee from AGF, which is our partners, we normally finance without any collateral. Also, on one area is that one of the strategic partnerships, the likes of, we have many institutions in the construction segment. We also have strategic partnerships. By giving us an assurance that these partners are, you know, sound and people who can work with, have already worked in the market, people that we normally work with. So, another area is adequate business skills. Now, I just want to leave a message to most of the people that some of you are sitting on the panel, as well as in front of me. In the startups, it's and I'm being very honest, the people that work into the office or at the bank, it's normally a tough sale, or rather tough conversation. It's not impossible, it's a tough conversation. So what I would request is that we have a lot of you who are into the venture capital, people who have access to business angels, people who have access to know the nitty-gritty, the chemistry around it. The people that need this finance, for example, I'm so thankful that someone from the United States, I can't see him right now, the people who are in need of this finance, who are present here in Tanzania, probably what we need is to put them in a room like this and discuss with them how to go about the chemistry behind it. Because what happens is, once they walk into a bank and they're seeking financing and they don't have the knowledge, or rather they do have the knowledge, they don't have the experience, they don't have the collateral, and they don't know, or rather the numbers. Thank you to one of the panelists spoke about the numbers. They tend to be very, over-promising. The numbers are very, very like on the high side. Like once they present the numbers to you, I'm also wondering, why am I doing banking? Okay? So you guys are the expertise. Help us to put these numbers in a form such that they do make sense. So that if I go to some of my partners who I've already partnered with, and they are ready to inject the funds, or rather cover the risk to some element. We have some partners we have already agreed on some segments, which I don't want to get into them now. For example, on the green tickets, greenhouse tickets, or rather the green resources, conservatives, and they have agreed to cover up to 50% of the risk. And this is because they are moving in that segment and they feel as Tanzania is the right time. So I urge you and ask you that if you can put them in a room, or rather establish small forums so that we can guide them how to go about to present those numbers. So that's my call on to you. But otherwise, as I said before, the element of startups, it is not impossible. It is just, it is difficult to comprehend at this point in time. And this is because of the conversations that we normally have. And of course, because of also we have some certain requirements from the BOT, as well as other regulatory forums that require us to. One of our prime role, or rather I would say goal, is to ensure that each and every Tanzanian has an access, or rather an instant access to finance. When I say instant access, that means minimum must required KYC And instant is that when at the simple of a click. And as you can see over the progression that we have done for the past 2 years, this is where we are heading. For some of you who have heard of the recent launch under NMB, something that is called Mshiko Faster. So for Mshiko Faster is that for you as an able citizen who just wakes up at home, you go at an instant of your phone and you can access credit from 50,000 all the way to 500,000 as long as you have an account with NMB. So under the business model for us, because I'm in the SME space where I have access to all these markets, this is something that has proven to be very beneficial, and because we don't need to ask questions, and more importantly, no need for collateral. And with that being said, I want to say thank you, and I want to welcome all of you to NMB for further discussions. And of course, should you need, business, so we can work together to ensure that we achieve this goal. Thank you very much.
Thank you very much, Christopher from NMB. Now, we are a little bit behind schedule, but I would like to take this opportunity to now welcome Honorable Lawrence Mafuru to give us an address. Without further ado, thank you. Karibu sana, Mheshimiwa.
Good afternoon. Just last week, a colleague of mine forgot his name, who we work with in the government because of these things of honorable and stuff like that. I don't want to forget my name. And so I'm very comfortable to continue being referred to as Lawrence. And this is simply because I think this honorable title is reserved for certain class. Last time I checked, I think this is for ministers, members of parliaments, and the level up there. For us in technical, we address each other with names. And I'm coming here on a technical level. I was actually originally invited here to sit in a panel. Somewhere between last evening and last night, my presence here was changed to speak on behalf of the Minister of Finance. And so first and foremost, I send his apologies. He would have wanted to be here simply because he's the Minister of Finance and Planning and he's got the responsibility with economic management. And therefore, this was an interesting forum for him to engage with this very important sector of the economy. But then again, he's in the middle of a budget process for the government, and he's being the Minister of Finance. It seems as if he couldn't leave Dodoma. And therefore, I jumped on the bandwagon to come here because partly I've been pinned in Dodoma for the last 3 weeks. An opportunity to come to Dar es Salaam, I could not just deny it, so I thought I should take it. So thank you for having me here. On a very serious note, ladies and gentlemen, I do have a speech which is written in Kiswahili. I will not attempt to read the speech, but I will try and highlight what the minister would have wanted to say. One reason I wouldn't even read is because I do not have the swagger that he would have used. You know Mwigulu Nchemba and the way he does his stuff. There's no way I can do it the way he would have done it. So the best I can do is to simply highlight what he wanted to bring. So first, I congratulate the organizers of this very important audience. This, for me, is also a key step towards delivering my role in the Ministry of Finance as a Deputy Permanent Secretary, Economic Management. I am charged with the responsibility of facilitating economic growth. And that's one of the macroeconomic objectives of the country. The second one is employment creation. Throughout the conversation here, we've been talking job creation and opportunities that exist. And therefore, you're pretty much talking to what is sitting in my docket. I think the other thing that we are looking at as a ministry is income generation. Again, everything that we've been discussing here is doing business, investing, and at the end of it all, it trickles down to income generation. So why this is important? It's pretty much for those three reasons that I've mentioned. That what you're doing here is really aligned to what the government wants to achieve, and in particular, with these two headwinds that I've had in the room. There are two headwinds that you can decide to go against, but it's going to be a tough attempt. The first headwind that is really blowing and heavily blowing is the youth population. The demographics of this country, and of course the global demographics, tells us that the youth is taking charge of the economic management of the globe. And therefore, if you make a choice of going against this headwind, it's not an easy attempt. The other headwind, which we cannot again afford to go against, is this headwind of technology. The fourth industrial revolution, everybody talks about it in Tanzania. Very few people know how to deal with it. But again, it's a huge headwind which is blowing heavily. Now, we cannot sit on the buy side and watch it as a government. Already, we're having challenges around management of fiscal policies without taking into consideration of the digital development on the planet Earth and therefore in Tanzania. So having an opportunity to listen and follow the discussions, and in fact, if I was to choose what to do between standing here and going through what I'm going now, and really asking to conclude this, I would have said, I already have a policy brief from the two presenters, Ava and Salum. They concluded with some very, very clear and direct policy briefs with which I could go back and say, this is what I've taken away, and this is already work to be done. So, you know, I would like to congratulate the Tanzania Startup Association together with Tanzania Venture Capital Network for these important efforts to bring out this sector of small and medium enterprises, and obviously the startup sector, so subsector, which Christopher has just pointed out that the conventional financial sector that we currently have in Tanzania have failed to support. And I think what we're doing here is to find ways and means through which we can unlock the potential that sits in this very important and powerful economic powerhouse. I want also to reiterate that what you're doing here is in line with the top leadership of the country. For those of you who remember, I think it was on the 15th of June in 2021 when Her Excellency President of the United Republic of Tanzania, Samia Suluhu Hassan, in Mwanza, when she was addressing the youth, she formally recognized the work that is being done by TSA and committed to support its activities. It is obviously along those, commitments that were made by Her Excellency the President that we think that it is important for us to get involved and find ways and means of coming out with some policy interventions that would be facilitative to unlock the potential that exists in this subsector. As Minister of Finance, we are trying and we're working very hard. And I can tell you, 4 months on my new role, I play the role of devil's advocate when I'm sitting on that side. Partly, I'm telling my colleagues on the other side to say, you need to understand what's happening on the ground. Stop sitting in government offices and developing policies on autopilot status. So it's important that people will continue coming out here and support. But also, an opportunity to tell you, and this is what I've seen on one of the very important exercises that is currently going on, preparation of the tax reforms for the new fiscal year, where we have a number of stakeholders who come to the government team that looks at this. what I've seen is very simple, very easy, some of them with very little depth propositions of whether it's policy incentives or tax incentives that speaks to only one side. It's been very directional with no attempt for showing or determining any value creation. So there's no value proposition that comes from this side. It's one thing to say we just need this incentive. You need to be able to demonstrate with that incentive what will that do to align with the macroeconomic objectives that the country is currently delivering. When you come to the Minister of Finance and ask him to waive a particular tax, whilst he's got responsibility to create resources to deliver on several other socio-economic aspects, you're simply asking him to shut down the moment you open that dialogue, that conversation. I think what I'm saying here is that on the other side, people need to be properly informed, and the dialogue to push for incentives should not happen at the time when the task force starts its budget preparations. In fact, the dialogue should start on 1st of July when the Minister of Finance concludes his budget speech. Therefore, you have plenty of time to engage and explain what you would like to see in the coming fiscal year. And you, as you do that, you make sure you come out with proper value proposition that really shows the shared value that sits on both sides. You need to create a win-win environment which makes it easy for the Minister of Finance, or the government for that matter, to accept the proposition while knowing that you're also making progress and therefore moving forward with an agenda which is common of job creation. I must tell you that the job that you're doing of engaging the youth population into some meaningful economic activities, you're delivering and you're supporting the ministry, because that should be the core function of the government and therefore the Ministry of Finance being the custodian of that agenda. So we will continue to support all the actors and players that are involving themselves in driving this agenda forward. It is not enough for the government to come out and start, funds. And we've been talking about the fund of funds. I'll just give you some directional takeaways as I conclude my remarks shortly. But we are also struggling really to make sense of the 10% intervention that we do every year. We're currently engaging with our colleagues in LGAs to really find a way of making sure that this 10% intervention that is being given in local government authorities is getting into a meaningful economic activities, but also the people who are receiving it are actually changing economically. What we've seen is that money has been disbursed, but there's no trickle-down effects. Year in, year out, nothing is changing to the groups that are receiving the money. So the government is not very comfortable with continuing with this. We'll be very welcome and open-minded to listen to ideas that will make this 10% allocation meaningful. As I think it was Ivan who alluded to it, local government target this year is expected to be at 1.2 trillion. And by default, 10% of that will be distributed. I don't know whether that will be going into a meaningful, injection. That's what we need to continue dialoguing and come out with some solutions that will help us to do that. In the last year, the government actually disbursed about 40 billion shillings, which went to different, groups of what would have been economic groups which could transact or do businesses at a micro level and bring about the changes that is required. But I'm not sure whether that has really gone into that meaningful intervention. Apart from those efforts, the government continued to recognize the capital capital injection that is being provided through the difficult conditions that this sector is in. We appreciate and we do recognize the work that the likes of Salum are doing. As Ivan christened him, is a voice in the wilderness. But that voice is being heard. Slowly and surely, that voice is being heard. And we would like to join the forces and put some speakers onto that voice so the voice can be heard, but also create some very you know, successful mechanisms that can help to push through the agenda. We cannot underestimate the power of this particular group. The global numbers are clearly showing that they're taking the world by storm. Whether we are going to create an environment within the formal government structure or we're going to leave it alone, there's already a huge push that is coming through. And the government cannot just watch and let that go. Apart from the money that are being provided by the traditional financial institutions, which are not necessarily addressing, because the commercial banking facilitation, I've been a banker for the last 20 years. I don't quite recall any bank in Tanzania that has been able to proudly say they have supported a startup. We do have a standard response. It's like we do have a template, all of us, that we don't look at startups. And it ends there, all right? So I guess we cannot continue knocking onto the banking sector doors or commercial banking sector doors to look for this solution. It is clear that the way the business models of the banks are set, they're not made for startups. And therefore, we need to devise sustainable sources of financing. And that's why we really would want to see that alternative financing that caters for this particular group is indeed working. And it is on that note that I would like to really consider continuing with this policy dialogue, and I'd like to welcome Saloom and obviously the organizers of this so that we can sit in a working session where we bring all the players in the room on the government side to unlock some of the critical potentials. We've been working with the Capital Markets Authority. This time around, with the reforms that are coming through, we're trying to support some of the capital markets activities, but there's very little that we've received from this particular area. So we would like to get a lot more and get involved and see how we can unlock that. I think at this point I'd like to also continue to say that we will continue to support everybody who is involving in unlocking the SME potential, purely because we know that our agenda for job creation, in every 10 Tanzanians, between 7 and 8 are employed in SMEs. And therefore, you cannot underestimate and therefore take for granted that effort. In fact, the 10 billion shillings that has been promised by the government to be opened, perhaps this is a good point to start in creating the fund for funds. Whether this is going to be scaled to a much bigger number, it depends on how we're going to structure that and its governance structure. As you would know, when it comes to partnering with private sector, there's always that level of skepticism on the other side. Trust has to be built. We're coming from a society that needs to invest in trust creation between the two sides. We've had a very long tenure of us and them, whilst of course we should be us all together trying to achieve a common goal. The government will continue to support and find out ways that we can help to unlock one of the important players that has not been very well developed in the country, the fund managers space. We talk about pension funds being able to invest in these venture capitals and startups. Given or left on their own, you're asking for the director of finance of a particular pension funds to really consider this. It's not going to come through. But if we have fund managers who can put together an asset class, an asset portfolio in front of a pension fund, investment committee, and show them the value of putting money in a particular venture capital, that would be an easy one. So I think for me, the missing piece that we need to work on and make sure that it comes out quite eminently in our economy or in our financial sector is the fund managers aspect. And really for that one, I welcome ideas that we can take away on how we can unlock this particular potential, whether it is through regulatory framework, whether it's through administrative measures. We are open for ideas and we welcome them so that we can take them on board. I've just said, pension funds, we need to relook at how their investment policies are set. I don't think they're limited, but it's purely, again, on the basis of it's a new area. We do not know how to measure the risk, and that's why I keep repeating to say, I think the key unlocking bit here will be to develop the fund managers aspect and ensure that it does support those. And I think at this point, I would like to reaffirm or respond to some of the policy questions that have been asked. I've taken note that some of the held up things around FCC thresholds for merger notification, which is currently sitting at $1.5 million. I'm hearing that this is a small number. We should not really spend time looking into this. We should let go. I'm taking that. It sits in the industry and trade as a portfolio owner for this. I'm representing the government. I'll take it away. Pension funds regulation, considering or allowing them to invest in VCs. I've just mentioned that probably the limitation there is unlocking the fund management side of things, which we should work together. Tax relief of VC backed startups. Again, this is what I said earlier. Let's start the engagement early and not wait until it's last minute. Create value proposition, shared value, and what it means in the bigger agenda. Every time you bring something like this, just consider what it does to income generation, job creation, and economic growth. If you can check those boxes, we should be able to be talking and move forward. National Government Fund of Funds, I think let me just put it here. As one of the things that I will do after this conversation, I'll get all the other key stakeholders in this particular regard, is the local government authority, industry and trade together with us, and you will recommend who are the other key stakeholders so we can sit around and get onto some actions to try and unlock this. I'm sure if we start this now, by the time we get into some policy decisions, whether it is within the Ministry of Finance or the other ministries, we'll have something to do. So I'm ready to take this on a working group, and I will lead that pattern. And then, of course, I think the policy dialogue should be an ongoing issue. We shouldn't just throw things ad hocly, erratically. I think we must have a proper action plan with clear issues that we want to address and follow them through in a structured, approach that will help us address them. Clearly, this is not like you're doing a favor to the government. We are an interested party. We do want to unlock this economic sector because we think SME is going to be the driver of the economy. We do not disagree on that one. And it's because of that that we will work with everybody that will be contributing through the unlocking. I am emphasizing policy dialogue is an ongoing process. It's not an event. On the government side, sometimes it's purely lack of understanding of what's happening here. You do have the role to bring that understanding in a more transparent and more clear way, and in which case then you'll also have the opportunity to understand the processes and how the government works. Sometimes, and I can say this honestly, having spent time in the government, I realize that we do not spend time to understand how the government works. We jump into things and we hit snags. We do not do proper research. We do not know how to map our stakeholders. I really challenge you to map the stakeholders correctly and develop a strategy for each stakeholder. Each stakeholder has a different problem. If you are going to ask for a waiver on tax, for example, you need to know whether that is a mandate for Ministry of Finance, or it's a mandate for the President, or it's a mandate for Revenue Authority, depending on the type of taxes. Certain taxes are purely sitting on the Revenue Authority mandate, and therefore going to the Minister of Finance is a waste of time because it doesn't have the mandate. The other way is true as well. Certain things happens at the ministry level, and therefore spending time with the Revenue Authority is a waste of time. So knowing the stakeholders and developing a strategy for each is going to be very helpful in this policy dialoguing actions. So it's not lost in this conversation that we've had here that we do have an excellent opportunity to unlock the economic position of Tanzania, and I felt bad in a way when Eva said Tanzania has a unique position in the region, and it got me thinking. Really, we're sitting between East Africa, SADC, Great Lakes region, and none of the other countries have the opportunity that we have. But that has been something we've been talking about. Everyone of Tanzania knows about that we are uniquely positioned. The really question is, what are we doing about that? And so let's stop talking about this unique position that was God given to us. And the discussion now should change into how do we capitalize? Yes, we know we are uniquely positioned. It's not good news. It's not news anymore. The real deal now is how do we capitalize now? So I suggest that the narrative going forward should be how do we capitalize our uniquely position that we have as a country? And it's in everything. If we really want to be the financial hub of the region, we can. If we want to be the logistic hub, we can. Pick anything, we are centrally positioned. So what is it that we have? Is it the blindness that has been given to us? We're given the opportunity and then we're blinded about it. So we should look for ways to unlock that. So, ladies and gentlemen, I don't want to take much of the time. I think, the points have been made very clearly. I would request here that as I conclude, that at the end of this program today, if you could develop a very brief policy document, clearly highlighting what are the things that you would like the government to address as a policy brief, that would be a very good takeaway, which I promise will be centrally actioned upon from the Ministry of Finance by engaging the other related government entities. We are now being challenged by the leadership to stop working in silos. We are having a phrase in the government, just so you know, we are working in connected thinking and a coordinated execution model. And therefore, I will be coordinating this, making sure that all the points that you want to be worked out will be, we'll start working on them centrally coming from the Ministry of Finance, but working with the others. Ladies and gentlemen, on this particular note, I'd like to thank you again for allowing me the opportunity to, having a fresh, sunny weather of Dar es Salaam, and before heading back to Dodoma in a few hours. Thank you very much, and I wish you all the best in your deliberation. Now, if Mwigulu was here, I believe he would have said something in Kiswahili. And I've seen the lady from TBC, before she goes and say, these people don't care about Tanzanians who cannot follow English, please indulge me so that I can say a few words for the Swahili media to pick, because we're Tanzania, Swahili is our national language. The population out there would want to know what's happening here. So let me try and play the Honorable Minister's role here. Okay. Kwanza kabisa napenda kupongeza TSA kwa kazi nzuri mnayoifanya ya kujaribu kuibua na kusaidia sekta hii ya biashara wadogo na wakati. Hii ni sekta ya muhimu sana katika kuchangia uchumi wa nchi. Serikali inatambua jitihada zenu ambazo mmekuwa mkizifanya kwa muda mrefu, pamoja na changamoto nyingi sana za kisheria na za kiutawala ambazo zimekuwa zikabili sekta hiyo. Na napenda nichukue fursa hii kuhakikishia kwamba pamoja na kwamba changamoto hizo za kisera na za kisheria zimeendelea kuwa kikwazo, serikali iko tayari kuwasikiliza na kufanya kazi pamoja na nyinyi ili kuhakikisha kwamba tunaondoa changamoto hizo. Kama ambavyo mtakavyokumbuka, serikali inatambua kazi zenu, na kwa wale ambao mnakumbuka, tarehe 15 mwezi wa 6, wakati Mheshimiwa Rais wa Jamhuri ya Muungano wa Tanzania Samia Suluhu Hassan alipokuwa akihutubia vijana wa Tanzania kule jijini Mwanza, alitambua taasisi ya TSA kwa jitihada zake za kusaidia wajasiriamali na wabunifu, na kuahidi kuwa serikali yake itakuwa bega kwa bega kuwasaidia kwenye safari yao ya kuanzisha, kukuza na kuendesha biashara. Na kwa hiyo Wizara ya Fedha inaunga mkono jitihada hizo, na tutakuwa mstari wa mbele kuhakikisha kwamba tunashirikiana na nyinyi kutatua matatizo hayo. Kwa sasa ndugu zangu, yako makundi mawili makubwa au ziko pepo mbili kubwa zinazovuma ulimwenguni na hapa nchini kwetu pia. Upepo wa kwanza unaovuma mkubwa sana ambao hatuwezi kushindana nao ni ukweli kwamba uchumi wa dunia na hata uchumi wa Tanzania sasa utaendeshwa na vijana. Kundi kubwa sana hili la kiuchumi ambalo hatuwezi kulipuuzia. Lakini upepo mwingine mkubwa unaovuma ni upepo wa teknolojia. Dunia nzima sasa imeshikilia ajenda ya teknolojia, Fourth Industrial Revolution, ambayo tunaizungumza sana, lakini bado hatujaanza kuitekeleza kwa hakika. Kwa hivyo ni wazi kwamba jitihada mnazozifanya hapa za kuifungua sekta hiyo, kwanza sekta ya biashara wadogo wadogo na wakubwa na wakati ambao wengi ni vijana, lakini ambao wameamua kuwekeza hasa katika maeneo ya ubunifu na teknolojia. Hatuwezi kuliacha jambo hili likaenda bila kulipatia msukumo wa kisera na wa kisheria. Ni kwa sababu hivyo basi serikali itaendelea kutambua jitihada hizo, na hata katika mazingira magumu ambayo upatikanaji wa mitaji imekuwa ni changamoto kubwa, tutapenda kushirikiana na wadau ili kuona namna gani tutaweza kutatua changamoto hizo. Sisi kama Wizara ya Fedha tutaendelea kuhakikisha kwamba tunaboresha mara kwa mara sera, sheria na kanuni na mazingira ambayo yatawezesha vyombo na taasisi zinazotoa mitaji na mikopo ya uwekezaji au ruzuku viweze kufanya kazi zao na kwa ustawi mkubwa. Hivi sasa taasisi za SACCOS nyingi na vikoba ambavyo tunaamini kwamba vina nguvu na kama vikiunganika pamoja vinaweza kuwa benki kubwa kabisa. Ukiangalia takwimu zilizopo, inaweza kuwa benki miongoni mwa benki 5 kubwa hapa nchini. Lakini changamoto iliyopo ni namna gani taasisi hizi zitaletwa pamoja na kuunganisha nguvu zao ili kuweza kuhakikisha kwamba jambo hilo linafanyika. Ndugu zangu, serikali imeendelea kutoa mchango wake katika kuhakikisha kwamba halmashauri za mikoa, miji na wilaya kwa kupitia 10% inayotolewa kila mwaka katika bajeti inakwenda kwenye makundi haya ya vijana. Lakini bado hatujaweza kupata matokeo sahihi ambayo serikali imeyakusudia. Kwanza urejeshaji wa fedha zenyewe, lakini hata matokeo yenyewe ya kiuchumi bado hayajaonekana vizuri. Kwa hivyo tunakaribisha mawazo kutoka kwenu ambayo yataiwezesha serikali kuhakikisha kwamba kiwango hiki cha pesa ambacho kinagawiwa kinakwenda kuleta mabadiliko ya kiuchumi na kuboresha maisha ya Watanzania, na hasa kwa kutengeneza ajira ambayo itawapatia kipato na hatimaye kuboresha maisha yao. Tunakaribisha mawazo ya kisera na ya kisheria ambayo mnadhani tunapaswa kuyafanya. Nimechukua maombi yenu au maoni yenu ambayo mmeyatoa hasa katika kuboresha maeneo iwezeshi ambayo yatawasaidia nyinyi kuweza kupeleka mbele ajenda hii. Nimeona maeneo ya tume ya ushindani ambayo inabidi yaangaliwe upya, lakini pia kuna eneo la mifuko ya pension kushiriki katika uwekezaji, na vile vile sheria zinazosimamia sheria ya makampuni na hasa kwenye ile eneo la limited partnerships. Yote haya nitayachukua na mimi pamoja na wenzangu serikalini tutajumuika pamoja na nyinyi katika kuhakikisha kwamba tunapata suluhisho la kisera ili mambo haya yaweze kuendelea. Kwa hivyo ninakaribisha mijadala ya kisera iendelee, na mijadala ya kisera kwa kweli inapaswa kuwa endelevu na isiwe ni matukio yanayotokea mara moja hapa na pale. Lazima tuwe na mpango mkakati wa kuwa na majadiliano haya huku tukijua kabisa kwamba tunataka kuachieve kitu gani katika hizo mabadiliko tunayoyataka. Baada ya kusema hayo, nawashukuru sana kwa kunikaribisha, lakini niwahakikishie kwamba serikali, Wizara ya Fedha itakuwa pamoja nanyi, na tunakaribisha ile policy brief ambayo sasa tutaitumia kama ndio tool tutakayoanza kushughulikia hizi changamoto ambazo mmezileta asubuhi ya leo. Baada ya kusema hayo, nawashukuruni sana na watakia kila laheri katika majukumu yenu. Asanteni. Thank you very much.
Thank you. Very insightful. Now, the work is on us. Policy brief to be drafted, to be shared to government, of which they will use this to get our input on board. I believe, Salum, you have a draft? Brilliant. There we go. Perfect. Now, the other take to this is that government is open for ideas, but not just ideas. We need to have constructive solutions to these ideas. So we need to develop our ideas further in explaining the solutions to these bottlenecks that we're having. As we've learned, if we're talking incentives, we need to clarify what, where, how, and how, in particular, they will help the sector, but also an alternative for government in terms of income. So, food for thought. Ideas and more sort of constructive opportunities. For the last session of this afternoon, I know everybody's hungry, but please give us a few more minutes for closing remarks before we start on to our networking lunch. I'd like to welcome Jumanne Mtambalike. I'm sorry if I'm pronouncing that wrong. Please, Jumanne, forgive me. He is a board member of TSA and he will do the closing remarks. Karibu sana, Jumanne. Asante.
Okay, it's okay. You got it right. It's Mtambalike. When you put it Sukuma accent, it's better. Okay. Yeah, so good morning, everyone. Guys, why so serious? It's a startup event. It's not a war. Yeah, so I'm humbled and honored to be in front of you to represent board chair of Tanzania Startup Association, Paul Makanza, who unfortunately wasn't able to make it today. Our good brother Lawrence Mafuru doesn't want us to call him honorable. For protocol reason, you're still honorable. So Honorable Lawrence Mafuru, Honorable COSTECH Director General Dr. Hamos Nungu, Honorable Nicodemus Mkama, CEO of CMSA, our partners, CEO of S6C Capital, my good brother Salum Awazi, Eva Warigia from East Africa Venture Capital Association, our sponsor partner and strategic partners, NMB, TVCN, and others who are in the room. First of all, we really like to appreciate the support that you've been giving to TSA so far. Without you, Tanzania Startup Association won't be able to achieve what we've been doing. And we need these strategic partnerships and coordination and systematic thinking between partners so that we can be able to take this to the next level. From the discussions today, a lot of interesting insights have come up, but one thing which is very clear, we all need to be innovative and we need to be first principle thinkers. So we don't need to stick to what things how they used to be. So there's nothing stopping NMB from starting NMB Ventures to invest in startup because Finca has done it and they have Finca Ventures. It's a private equity wing of Finca. So why not start a private equity wing of NMB and invest in startups? So we need those disruptive ideas and innovations. Several times I've been told by government officials not to talk about disruptions because it's not the word they use in their corridors, but we need the disruptive governance that is angry and fast and ready to transform. We need to invest on talents. Eva said about this, the importance of having young people with exposure and connections because now we'll be building regional and global businesses and not just local startups. We need to invest in cross-border collaborations and partnerships. You're seeing Ian partnering with a colleague from the US. So we need this kind of partnership because we're a global village right now. So if you're thinking about raising capital from whether it's Chanzo Capital or DOB Equity or Samurai Incubate, they're looking for diverse teams and young people with exposure. So we need to create a platform for our local startup to be exposed and get those opportunities. revisiting the role of the government is key. So global governments now are moving toward a role of a coordinator instead of a regulator, and facilitators for things to happen more fast. So it's very key for this to happen, and we're already seeing it in the sixth phase of Her Excellency President Samia Suluhu Hassan. A lot of innovative approaches are happening to address challenges facing startups. For example, I know that the Commission for Science and Technologies are working on the National Innovation Framework. I know that ICT Commission is also working on the National ICT Sandbox to create a conducive environment for startups. So there's a lot of initiative also within the government that are partnering with private sector and other organizations such as UNCDF to create those conducive environment. And this is very key to our ecosystem. And also public-private partnership is key. We want the funds, but I think the fund managers can come from the private sector. It's really, really important for that to happen. It's happening in other mature ecosystem also. Again, we would like to appreciate the commitment from the government, and Tanzania Startup Association in partnership with TVSN and other partners can work on this policy brief. And as a board which is responsible to hold the CEO Zaoro and his team accountable, Honorable will make sure that document reach to your office in time. So that's our commitment. And that being said, I really like to appreciate all those who've come here, spend their time here with us, contribute on these discussions, and we are looking forward to continue working together. This is a perfect time. This is a perfect government. This is a perfect audience, and we're the right people to transform Tanzania. Thank you.
Thank you very much, ladies and gentlemen. With those closing remarks, we are finished for the morning. Asanteni sana, siku njema. We now welcome you to lunch upstairs, right? Thank you. Sorry, there is new communication being brought forward. 1 second, please. It's still lunch. That's not changing. Good. All right, so lunch is not being served upstairs, but rather to the restaurant outside. Karibuni. Asanteni sana, siku njema.